Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, April 28th, and we have like 17 different things going on right now in the pre-markets. We have like 15 different things Bessent just said, 20 different things Trump just said. He just put out a tweet about Canada. We have the Japan economic minister talking right now. We had JP Morgan that just put out a report. We got a lot to talk about. We got a lot to talk about. We got a brand new Bessent interview. I think we're going to get started just with that. Thank you, everybody, for being here. Real quick look in the pre-markets. We are pretty much green throughout the pre-markets, and there's a couple of reasons why. We got a lot of different headlines this morning. Palantir right here up about 1%. Tesla up 2%. Robinhood above $50, 50.58, up 2.29% in the pre-markets. Thank you, everybody, for being here. I think we'll get started right with Bessent before we get into any analysis, because I think the reason for all this green is based on what he said. So let's get into that right here, and then we will get into everything else we got going on. Here is Bessent. This happened literally 15 minutes ago. Here we go.
Joe, Treasury Secretary does a lot of things. Running the White House switchboard into one of them. So all aspects of government are in contact with China, and in terms of trade negotiations, we'll see where this goes. But as I've repeatedly said, that I believe that it's up to China to de-escalate, because they sell 5 times more to us than we sell to them. And so these 125, 145% tariffs are unsustainable.
We also hear about all the different countries that may be ready to deal on some level, whether it's tariffs or currency or whatever. Do you have any idea how close we are and who could be first? And is it possible, Scott, that there could be a template that could be, we wouldn't have to do each one individually? Because it seems like it's very complex, and this would extend the process to months or even years to do 100 different countries. Is there any way to do something that looks almost standardized? And who would we do it with first?
Joe, we do have a standardized template. We're not going to share it. But as I've said before, there are 15 to 18 important trading relationships. As you said earlier, we'll put China to the side. That's a more complex negotiation. And with the other 17, especially with the other Asian countries, we've had many countries come forward and present some very good proposals, and we're evaluating those. But I tell you, Joe, when I look at these proposals, and some of them are really willing to lower their tariffs, lower their non-tariff barriers, but I look at what they're proposing and I just think, how did we get here? How did we get here?
Right.
And I agree with President Trump. I don't blame it on these countries. I blame it on the past administrations. And it's going to be a big victory when we make progress in getting these tariffs, non-tariff trade barriers, currency manipulation, state subsidies of labor and industry off.
Been quite a bit of consternation expressed about the U.S. brand and the U.S. losing its preeminence as a place for capital allocation and investment. I want to bring up, I just happened to see it this morning, one of our frequent guests, Kyle Bass, points out, okay, you're going to go somewhere else rather than the United States. Europe is anti-growth, anti-capitalist, pro-tax, super regulatory, loose collection of broken economies, and points out that the Euro Stoxx 50 index has had a 1.86% annualized return for the past 20 years. The S&P, 10% plus. Are you concerned that this could snowball into a point where would they go? If you don't go to Europe, where would you go? And where will Europe go? China? Is that what we're worried about?
Well, Joe, look, what this administration is committed to is keeping the U.S. the best place in the world for capital to arrive. And we are doing that. We're going to have tax certainty. We are going to not be taken advantage of in trade anymore. And we are going to deregulate the deregulated large economy in the world. If you look at the Draghi report, he says that Europe has basically tariffed themselves. I think it's 50% on goods, 100% on services, and we'll see if they can make any progress there. The other thing I would tell you is I imagine that the Europeans are now in a panic over the strength of the euro, and you're going to see the ECB start cutting rates to try to get the euro back down. Europeans don't want a strong euro. We have a strong dollar policy. We just saw this unfortunate incident where China claimed sovereignty over a Philippine island. Are you going to send your capital to a country that behaves like this?
Mr. Secretary, I have a question that relates back to China, but also back to a comment that you made last week that I think actually moved the market. So last Tuesday, you had a meeting that JP Morgan hosted. This was this private investor summit. My question to you is, what confidence or assurance do you have, having made that statement, when it now appears, maybe I'm misunderstanding it, that when you did meet with the Chinese last week during the IMF meeting, you did not talk about tariffs yourself, and it sounds like you're not engaged or involved in these China tariff discussions yourself. Maybe the president is. I know he said that he is, but you said that you don't know about those conversations.
I remember that China meeting was really important, or that JP Morgan meeting was important, because then 5 hours later, Trump ended up taking off the 145% tariffs. So when that news came out, markets were really happy. That was the day of Tesla earnings, and we were up 2% after hours.
Well, Andrew, first of all, to clarify the meeting with JP Morgan, there was nothing that I said in that meeting, nothing that I had not already said in the mainstream media 72 hours before. So I was surprised when the market rallied. And if you were to look at what happened after the meeting, after I sat down for a press conference, markets sold off. So if you bought during the meeting, you actually lost. To get to the meat of your question, that it's a complicated relationship with China, but it is my belief that which is unsustainable will not be sustained. And again, the Chinese business model is predicated on selling subsidized goods into the U.S., and it's just not a long-term business strategy for them. So I am sure that they will come and want to de-escalate.
Right. But that's just so we're 100% clear. And by the way, you may very well be right. I actually happen to agree with you on that front. But I'm agreeing with you in the context of just my presumption that that is correct, not because I've engaged in conversations with them directly. And it sounds like you haven't either, just so we're all on the same page.
Andrew, just to feed the news cycle, I'm not going to talk about where we are or not. What we're going to do is create the best deal for the American people, and that is obviously not done on television.
Mr. Secretary, last Friday, Time magazine published an interview with President Trump where he said that he could see a year from now 50% tariffs on goods coming from China. Is that a future you could envision?
Again, Becky, we're going to have to see where the de-escalation takes us. President Trump is leading for the important trading partners. President Trump is leading the negotiations, and we'll see what he decides on.
Mr. Secretary, earlier this morning, Japan's economic minister said that there will be no change to our stance, that we are demanding full removal of U.S. tariffs. Can you speak to where our conversations are with the Japanese? Because clearly, at least publicly, they seem to be pushing back.
Well, again, Andrew, if they want to litigate the negotiations in the press, they have an election coming up, an upper house election coming up in July. So I can't imagine that they would say anything else. I don't think they're going to come out and say, oh, whatever the U.S. wants, sure, we'll do it. But I will tell you that the negotiations with our Asian trading partners are going very well. Vice President Vance was in India last week, talked about substantial progress. I have mentioned that the negotiations with the Republic of Korea have gone very well. And I think we've had some very substantial negotiations with our Japanese allies.
Secretary, China quietly says here, exempting certain goods from tariffs that they need, which shows their dependence on a lot of, or interdependence with the United States on many, many different things. Similarly, the Trump administration has announced quite a few exemptions on some of the reciprocal tariffs for things that we absolutely need here. Isn't this sort of an opening for what negotiations would look like? And would you just take a complete decoupling with China off the table right now, since we know global trade has benefited the globe? We don't want zero global trade. But doesn't this indicate what's at stake here?
Well, Joe, I think this makes my point that the Chinese, they are exempting all these goods, tells me that they want a de-escalation. And what we haven't done is escalate by embargoing those goods or putting a trade ban on those goods, which we could, if we needed to gain more leverage. We haven't done it. They've actually given us a list of what comes from the U.S. that is valuable to them.
Some of this actually show up, whether it be in prices or, I guess to some extent, you could suggest in shortages of certain items. Where do you think we stand just in terms of how long it will be before Americans really start to feel this?
Okay, this is an important question because one of the mainstream narratives going on right now is that we are going to have empty shelves in the United States and goods and services that people rely on is going to start to go away, which obviously wouldn't be really good. So curious to see how Bessent thinks about the idea of potential goods and services just not being here in the States due to supply chain issues.
Becky, I can't tell you what various retailers have done in terms of stockpiling, in terms of substitution, in terms of elasticities. I didn't see Gary's interview.
Mr. Secretary, I have a separate question.
Interesting. So Bessent kind of not really taking an approach here, and he kind of leaves it open, right? So he's not definitively saying, I don't think there's not going to be any empty shelves, but he's also not like scared that it will happen. So I guess we're going to have to find out in the coming weeks if empty shelves, which if you look at some of the shipping port data, which we'll talk about today as well, there are some routes that have started to get cut off because of the tariff volatility, or just the demand in those routes is starting to go down a bit. And maybe that can result in some issues in shipping. So we'll talk more about that. Look, as soon as I was going to bring that up, this is what pops up. This is the exact chart I want to show. So you see right here, container ship traffic from China to the U.S. keeps sliding over the last 15 days. Both total and used shipping capacity have dropped sharply at LA and Long Beach ports in California. Chinese vessel arrivals are down 29% from last week and 44% year over year. Cargo volumes have nearly halved as well. We're going to be finding out pretty soon if the cargo volumes going down basically 50% year over year. Is that because of cheap Chinese goods that don't matter and we're Americans are not buying those anymore because of the tariffs, or are those actual products and services that we're going to see empty shelves on for things that we need? So that is one thing I think that we will find out, and the administration will eventually have to see if it is a big deal or not. All right, so we had a lot of stuff from Bessent. First of all, thank you everybody for being here. Good morning to everyone. I will be speaking about the Toronto meetup at the end of the show because we got a lot of news coming out. So towards the end, I'll talk about the meetup and how it was. This is the picture that we got, group picture there. We had about 170 people. Pretty awesome, pretty epic. I know a lot of you guys are in the chat right now. Thank you for showing up. It was a really fun time. So I'll talk more about it at the end of the show. And yeah, I definitely have some thoughts and comments and just some appreciation to show to everybody. In terms of my voice, it might be a little off today. Sleep schedule still not the best. Kind of slept over the past 24 hours, kind of didn't. So I'm sorry if the voice sounds a little raspy, but I don't think I'm sick. I just need to get some more sleep. So that's all. So hopefully that's not too bad. All right, let's talk about what Bessent just said. So the most important things Bessent just said for those that are just joining and why we are so green in the pre-markets, hoodie back above 50. This interview can basically be summed up in these three things right here. But before that, real quick, electricity being shut down in Europe, Spain, France, Portugal, apparently, are some of the most affected. So if you are out there hoping for the best for everyone there, I don't know why this is happening. There's not a reason for the electricity outage from what I can find right now. The only thing I have is that Spain's rail system is fully disrupted. And it's being hit by a nation power outage. Don't know if this is a cybersecurity thing, if this is a natural disaster type of thing. If anyone has any updates in the chat, let me know. No reason yet. Okay, so most people say no reason. Yeah, very weird. I can't find any reason for why there's blackouts happening. Mainly Spain, Portugal, parts of France, and then Belgium. Widespread disruptions to electricity. No trains in Lisbon too. Wow. Yeah, it's weird. I can't find a reason for why. And some people are thinking that, maybe there's something a little bit fishy going on, and it's not just a technical glitch in terms of the lack of electricity. But I'm sure we'll get some updates more on that, and we'll see what's going on. In terms of what Bessent said, so he said the first trade deal might come as early as this week or next week. By the way, Bessent's talking to the media tomorrow at 8:30, which to me means, who knows? Maybe he went on the media today to kind of preview the fact that he's going to announce a deal tomorrow. If we get an India deal tomorrow, a Korea deal tomorrow, a Japan deal, maybe that's why we're getting a little bit of market momentum right now. He said Chinese exemptions show that they want de-escalation on trade. And so he's saying, all right, the Chinese are starting to finally feel some of the pain that we've inflicted based on our tariffs. And then India might be one of the first deals we sign. Yeah, if you take him at his word for what he's saying, I guess you can say that's bullish. And that's why markets are up right now. Pretty much everything is green. And I wasn't live on Friday. I caught what happened at the last hour at like 3 p.m. And I was just in a coffee shop when I pulled up my computer, and I was just like, wow, I didn't know it was going to be this green. And Google was flat, but Palantir, Tesla, Nvidia, all these stocks were green. We are continuing some of that momentum, not Nvidia. Nvidia's down 1%. I believe that's because of the Chinese news yesterday. We'll talk more about the chip companies that are catching up to them. But the Qs are up. Grab is up. Rocket Lab's up 2.5%. A lot of these growth stocks getting love. SoFi was up 2% last night. SoFi right here, I think we're definitely above 13. Yeah, look at that. 13.20 on SoFi, 2.48%. Palantir up another 1%. Meta's up 1.65. Spotify's up 2%. We got some earnings to look at as well. All the semis are getting hit based on that Nvidia China news. SMCI's up a little bit right now, but everything else is pretty red. AMD's down 0.5%. ARM's down 0.2%. Taiwan Semi down, and then Nvidia down 1%. But outside of that, if we get a new deal soon, yeah, maybe that can be an argument. Maybe that absolutely can be an argument for why we continue to rally. HIMS right here is up 4.7% as well. So Bessent said some good stuff this morning. Again, this market is very headline driven, and we're getting a lot of different headlines from different areas. Bessent giving those main headlines that the first trade deal is probably coming soon. And then while Bessent was speaking, we got a Trump tweet from the country I just came back from yesterday, Canada. He says, good luck to the great people of Canada. Elect the man who has the strength and wisdom to cut your taxes in half, increase your military power for free to the highest level in the world, and have your car, steel, aluminum, lumber, energy, and all other businesses quadruple in size with zero tariffs or taxes. If Canada becomes the cherished 51st state of the United States of America, no more artificially drawn line from many years ago. Look how beautiful this landmass would be. Free access with no border, all positives with no negatives. It was meant to be. American can no longer subsidize Canada with the hundreds of billions of dollars a year that we have been spending in the past. It makes no sense unless Canada is a state. Okay, given I just came back from Canada, I think we really need to tone down this 51st state rhetoric. It is like, originally I thought it was a joke. And in some instances when Trump was using it, I was like, okay, it's just like he's trying to be funny here. But now it seems like he's like, I still think he's joking to an extent, but the way he's acting is like this whole 51st state matters. And it's like, it's an idea he's trying to get the Canadian people to buy into. It's stupid, dude. It's stupid. It's ridiculous. Like, it's really ridiculous. And I'm saying this, given I came from Canada, I talked to a decent amount of people and I asked them, what do you think about this? And they were upset because of course they would be upset. They have national pride in their own country and they don't want to freaking hear some guy in America say that their entire nation's country and culture and sovereignty should be turned into a state and merge with America. We can be allies, we can have a great relationship, but the idea that we would take away the Canadian national pride from people when you say things like that, it's just ridiculous. And like, I just don't think we can keep saying stuff like that. In terms of Mark Carney or Pierre, Carney's winning this thing. I don't know if anyone needed the update on that, but Carney's winning this thing. The Liberals lead in every single one of them, but the lead has shrunk over the last 2 to 3 weeks from up 15% to now just up 3%. I spoke to a bunch of people in Canada as well, and their argument is that it's very likely that the Liberals win. So I don't think Pierre is going to win. I know in January he was starting to get a real good chance, and ironically, you could say Trump and all this 51st state nonsense has turned people off to the Conservatives in Canada and pushed them to be more to the liberal side because of the fear that Pierre turns into a Trump type figure, which maybe got half of the country in America to vote for him. But in Canada, I don't think that's the case. So I expect the liberals to win. If they don't win, I would be very shocked and surprised. And I mean, I think that would have massive implications on the market as well. But I don't think we're going to see any different right here in terms of who's going to end up winning here. So this is what we got in terms of the Canada update this morning as well. It doesn't look like Canada is going to be the first trade deal, which is so ironic. It looks like it's going to be someone that is not one of our biggest allies because of how we're treating Canada right here. But the market likes it. The market likes some of the momentum on trade deals. You got Hims right here up 4.5%. Again, Hoodie up 2.21. NVIDIA is one of the only tech names that are down. Even Google up a little bit, up 0.3%. In the pre-market. Steve and I did a podcast last night talking about the Google earnings and the way the market's treating Google. Pretty disrespectful. If you go through some of those numbers, it is quite insane that Costco gets 3x the multiple for, well, the big stat that we saw last night was Google makes Costco's entire net income for a year in 20 days. And Costco trades at 50 times, Google trades at 18 times. So, I mean, take with that what you will, but it seems like Google's undervalued. Apple right here at 209, that's up a little bit right now in the pre-market. Spotify again up 1.82%, and then Oracle up about 0.5% right now in the pre-markets as well. And so we are getting a little bit more of momentum. Big Bear AI is running. Let's look at that one real quick. BBAI. Yeah, that's up 10%. Okay, so we'll look at earnings because I think some of these names are running off earnings as well. Yeah, my camera was exhausted, so we're gonna have to use this camera for a little bit until that one comes back. Okay, cool. So that was what Bessent said this morning. Again, we got the major blackouts going out right now. Then you got Trump talking with Canada. Essentially, I think this week is going to have a simple question. Do we get deals or not? Do we get deals or not? And if we get deals, I think the market's going to like it. If we don't get deals, I think a lot of this momentum is going to go away. U.S. stocks are off to their worst start against the rest of the world in over 32 years. So although we've had some momentum in the past week in April, we're ending out April in a couple of days. April 8th was one of the worst days since 2008. And it was 0.2% away from being as bad as the dot-com bubble. So, or one of the worst days in the dot-com bubble. It's been a tough month. Now we've recovered a decent chunk of it, which is not bad. We're obviously not back at that 570 level, which was the 200-day moving average. We're not anywhere near 6,000, but we were at 4,800. Now we're at 5,500. So the reason for this rally and the craziness of the rally we saw last week, because last week was just an incredible rally across the entire board, is because of the market's perception that tariffs are going to be walked back, or if tariffs are not walked back, that Trump is going to get a lot of deals done. And what Bessent said this morning is essentially the same argument that, hey, we are going to get a bunch of deals being announced soon. And it's kind of like, all right, if you wreck the markets, what can you say to get the markets to come back up? And they've been saying all the right things to help the markets get back up. Trump's going to be giving his first 100 days interview on ABC News tomorrow night at 8 p.m. And so we're going to be able to see what Trump says to explain why his first 100 days are either successful or not successful. I'm sure he's going to say it's been successful. And I'll be covering that interview in probably 48 hours on Tuesday, and we'll cover it live and try to see what he says. Now, in terms of getting bullish, you got some of the big banks getting bullish as well. JP Morgan says right here, updating our view to tactically bullish. The market is likely to drift higher in the absence of negative news. The continuation of mega cap tech earnings may give the market a tailwind, and the potential for an announced trade deal skews the risk reward opportunity. This is pretty incredible, right? We talked about this a little bit on Thursday, and JP Morgan came out with a note that said, hey, we think all the damage we've had over the past 3 months could be reversed if the worst has already happened. And this idea that the bottom is kind of in, the worst has already happened, doesn't mean we have to spike back up to the moon, but it does mean that slowly by slowly, you announce good things, you walk back a little bit of the tariffs, big tech crushes it, which Google has already crushed it. Hopefully Meta, Amazon, Apple this week continue that momentum. That would be the architecture for how the market starts to go a bit higher. And if that's the case, and then we get a Russia-Ukraine deal, which we'll talk more about, and that potentially leads to a little bit more peace. You get the Japan deal, get the India deal. That is where I could see JP Morgan continuing to be a bit more bullish. So, I mean, look, I think the majority of you, including myself, have pretty much just bought the dip all year. I know some people have gone into cash, some people have shorted. If you've shorted over the past week, you're doing really bad. So the timing has not been the best if you shorted over the past week. But
if you have just continued to buy the dip and went a little bit heavier buying the dip over the past 2 weeks, then it's starting to pay off. I think we need to see the earnings picture to really solidify how well it's doing. But the macro picture in some respects is starting to clear up. So for example, the shipping data I just showed you guys that ships from the United States to California ports are down 44% year over year. That's bad. And if there's really important items that we need, then that would be obviously something that like is bad, because we're going to have goods and services that are not present in the United States, and we need all those things to survive. So that's not a good thing. And we'll see the implications of that in a few weeks. But then what is good is that the 10-year is coming down 4.287. This thing was at 4.5 2 weeks ago. So like you've got certain parts of the macro that are good because the bond market's starting to stabilize a little bit. $19 billion of inflows came to the bond markets last week, which is incredible. Like it was one of the best weeks we've had all year. So we've started to see a little bit more stabilization. That's essentially the credit market saying we can chill out a little bit. We don't have to be as afraid as we were before. But then you've got shipping data that looks like we could be losing some goods on our shelves theoretically if Canadian vessels or Chinese vessels continue to come down year over year. So there's certain parts of the macro that I think are phenomenal, that are starting to clear up. And then there's other parts that are like, all right, they're still very unknown. And I think the market's trying to figure out how they navigate all those different issues going on currently right now. Let's talk about earnings. We have a bunch of different companies reporting today. So far, 78% of the companies that have reported in the S&P 500 have beat on earnings, and earnings growth is at 7.4%. That number is going to change dramatically this week. This week, we have 180 companies reporting. That would put us at about 50% of the overall S&P 500 companies that will be putting out their results. And so this week will be the big week to see, is Q1 a growth quarter, and are we actually putting up earnings growth? This is Domino's earnings, 433 versus 407. They beat by 6% on EPS, and they missed by 1% on revenue. Domino's right here is down about 2% in the pre-market. So Domino's, if you bought it as kind of a recession safety stock, not really getting the recession safety right here. Overall earnings are decent. I mean, EPS 6%, revenue missed by 1% is very slight, but the stock is down about 2%. The other earnings we have this morning, did we have anything else? I think we had a couple others. Oh no, it's just Domino's. Yeah, Waste Management is after hours. That's another big one. Waste Management actually been one of the stocks that has been holding up pretty decently through this volatility. So the only one we had was Domino's. Tomorrow we have SoFi, PayPal, Spotify, Coca-Cola, UPS, Pfizer, Altria Group, GM, Royal Caribbean, BP, Sherwin-Williams, and Hilton, and JetBlue in the morning. And then in the afternoon, we have Visa, Starbucks, Snapchat, First Solar, and Mondelez. Okay, so tomorrow's going to be the big one. Today is just going to be a light one with Domino's. 4 is also tomorrow. Yes, okay, we have 4 tomorrow as well. So we'll see what we get there. Cool. So Domino's was the only major earnings, down about 1.94%. Not an actual bad result. Everything else in the pre-markets enjoying the momentum and green that we are seeing right now. Palantir, 114 in the pre-markets. Last time we saw 114 or any of these levels was at the February 19th top, February 19th, February 20 timeframe. And so it looks like the market is ready to give Palantir that multiple again. The thing about Palantir that surprised me right here is that we haven't had earnings yet. And typically Palantir drops before earnings. Like last time we fell to 83 before earnings, and then we spiked up to 120. By the way, a lot of people in Toronto made some money off Palantir. So I met a lot of OG Palantir supporters in Toronto. We'll talk more about that later, but it seems like Toronto was one of those cities that heavily believed in Palantir back when it was $7 and $8. But in general, this is the opposite of what Palantir usually does. Right now, it's spiking going into earnings. And I don't know if that's a good thing or a bad thing. All I know is that it's nice to see. But the question is going to be if the results are able to live up to this. And even if they are able to live up to this, has the market already given it so much momentum that it just can't go higher? Or does Palantir come out and put 40% growth and the market takes this up to like 130? I mean, I really have no clue. We're going to find out on May 5th and see what those earnings look like. I am confident that earnings are going to be very strong. Like this is really one of the most confident earnings I've ever felt about. But in terms of the stock, given how it's running so much before earnings, maybe that takes a breather, or maybe that continues to get a bit higher. Tesla as well, dude, 290. I mean, there was a big auto regulation that was basically deregulated on Friday, from my understanding, that had to do with electric vehicles and autonomous vehicles. And as a result, you had Tesla gap up 10%. Google put up one of the craziest earnings I've ever seen. it does nothing. Tesla went up 10% off of something that really didn't even, change anything for the company yet. It's just one of those things in the future that might be changed, but investors bought it up. So Tesla's up because DOT introduced new framework to speed up AV deployment, where the US-built self-driving cars can now be exempted from certain federal safety rules. These were previously only available to some foreign automakers. Again, that doesn't mean robotaxi or any of this stuff happens overnight, but the perception is, at least by how the market's treating it, whether it's hedge funds or retail buying it up, someone's buying hundreds of billions of dollars of Tesla in terms of how its market cap is increasing. It is, I guess, the idea that this is going to be good for growth, even if Tesla doesn't have the growth vectors here right now. So the market's, I think, in a very interesting spot where companies like Google put up some of the best earnings you could imagine. And then Tesla, which, I mean, this is one of the reasons why Jeremy sold Tesla, right? He just felt like the earnings were so bad he couldn't fathom holding it at 250. Now it's at 290. And the reason it's at 290 is really off the narratives and the perception of what it's going to happen in the future, which it's, that could be a reason it continues to stay at 290. Who says it has to come all the way back down to 220 or below 200, as people are saying, or it's setting up for an epic crash? I mean, I think we're going to have to see how this plays out. But if we get a lot of good macro news, which is what we got this morning and what we got pretty much on Thursday and Friday, yeah, Tesla's probably detached from some of the fundamentals, but that might not matter right now, given the necessity for people to want to get exposure to Tesla. And I think that's what we're seeing right here. NVIDIA catching up on Friday was also nice. It was nice to see like that stock finally bounce up about 5%. I know it's down right here in the pre-markets, but it was nice to see it get a little bit of a bump. And I think that bump was also rooted in the fact that if everything's finally pumping, we got to 115.38. NVIDIA was going to join that party as well. Yeah, we talked about the Bloomberg Canada stuff. We had Press Secretary Leavitt say you will be hearing more about this deal this week. So it looks like Leavitt is following up on Trump's comments around Canada. I would imagine Trump's going to talk more about Canada this week. He's probably going to talk about a lot of things in regards to different trade deals. I think this is going to be one of the most volatile weeks we've had this entire year. We've got a lot of companies reporting earnings. And based on those companies reporting earnings, we are going to not only see if the earnings are good enough to justify some of this momentum we have, but also if Trump keeps giving us good news in the context of what's happening with tariffs and trade wars, good earnings plus any positive headlines, I mean, that could continue to give us some more momentum. Here is what Ryan Detrick had to say about this bull market, and if we have some more green on the way.
As you mentioned, my friend Scott Brown there talked about this. It could be the second largest intra-month reversal ever. Now, listen, we only have a couple more days this month. Maybe we don't quite get there. But to answer your question, we think that was a washout. We think it was a significant washout. The upside is happening, and we can get into some of the weeds of it here, but we do think there's some more upside here. And honestly, Frank, we think the lows of the year are in. And I know, you can't make that for sure call, but we can get into it. Some of the signals we saw last week, along with this huge monthly reversal with all this negative sentiment, like you just talked about before it came on, look at Europe. Look at some of the other parts of the world. I mean, like Germany's almost at an all-time high as we do this. To me, that's hard to think this is some global calamity when one of the most important stock markets in the world is flirting with an all-time high. We think the U.S. probably plays catch-up the rest of this year, and we think lows might be in.
All right, think those might be in. You're also seeing some very bullish market signals. We're going to show the audience the two things that you're really focused on. One of them is called the Zweig breadth thrust. So I'm going to have you explain that one. The other one is something that we all can see very clearly ourselves. Last week, the S&P had 3 days up 1.5%. So according to your research, after the S&P is up 1.5% in 3 consecutive days, on average, the S&P gains 22% over the next 12 months.
I didn't even know that. I knew we had like a 4-day bullish stretch. I didn't know we were up 1.5% 3 days in a row. That's pretty incredible. And I think that's definitely getting some of the technical people that look at historical data to get excited, because when that happens, either it's a massive bear market rally or we have legit put in the bottom.
100% of the time. So it has some very clear history of a positive trend. Do you think we're set up for the same thing this time around? And keep in mind, over these next 12 months, we have the end of the tariff pause potentially, and we have some other trade policy that could come up. A lot of outliers potentially that might change that historical precedent.
Yeah, you're not kidding. And also, we're getting closer to the midterm election year.
Right.
Midterm years usually aren't that great. But listen, we do think significant upside is here. We've been overweight equities all year. We have dialed that back a little bit going into Europe, going into some low volatility, some other areas. But we think, stock's still going to do pretty darn good with what you just said. And like you said, the listeners understand 3 days in a row, up 1.5%. That's a buying thrust. And like you just said, higher a year later, 10 out of 10 times. It is what it is. But the other one's that Zweig breadth thrust. I know a lot of people on social media talk about this over the weekend. 19 out of 19 times, Frank, we've had a Zweig breadth thrust. The stock market's higher a year later since World War II. What in the world is it? I'll keep it real simple. Looks at advanced declines on the NYSE. What we're looking for in this is extremely oversold. And then within a 2-week period, you go from extremely oversold to extremely overbought. Sound familiar? That's what we just did. And it triggered on Thursday. And like I just said, 6 months later, never lower. A year later, never lower. Higher 19 out of 19 times, up I think like 22 or 23% on average a year later. These are just little clues. But any one of these by themselves, no. You just take a grain of salt. When you stack these on top of each other, one more just to add to the fun and the numbers on a Monday morning. 3 days in a row last week, we had 70% of all the stocks in an NYSE higher. So everything was higher also. 1 year after that, S&P's higher 26 out of 27 times with up around a 20% average return. So when you stack these on top of each other with the earnings season, with the negative sentiment, yeah, Frank, we think, I know the headlines are the headlines. Last comment here. We're still
Ryan,
pretty optimistic.
Before we get to the last comment, I want to ask you about one other thing. So you're seeing the bullish signals, but you're also giving me some mixed signals because you told us you really like the Invesco S&P low volatility ETF. We're going to show it. It's actually underperforming the S&P since the tariffs were announced. If you go back to April 3rd, so you like a low volatility ETF, but you think we're set up for a bullish run. So why would I put my money in a low volatility ETF if we're set up for a bullish run? And why would I invest in this one if it's underperforming the market while it's been volatile? Isn't that the whole point of a low volatility ETF? Is that when we see volatile times that it's going to outperform?
No, you're right there. Now, the way we've used it is as a barbell. So to get real in the weeds of the models we run for our Carson partners, we've done some momentum barbelled along with low volatility, and that's maybe 15 to 20% of our portfolio. That barbell trades worked really well. So
the main thing Ryan's talking about right here is this is a Zweig breadth thrust that I first heard about last week, and some of you guys might have heard about it for the first time as well. Essentially, the indicator is a lot of selling into a lot of buying, which is the thrust right here. And yeah, I guess 100% of the time, 12 months later, you get a ton of green. And it kind of makes sense because if you get a lot of selling, that leads to a bottom, right? Because eventually markets bottom at some point. And then you get people that buy the market up from the bottom because they don't want to buy gold. They don't want to buy bonds. They want to invest in stocks. And so, I mean, if there is an argument that we have that type of a return this time, next year is going to be good. He is right about midterm years. Midterm years tend to not be good for the markets. I think there's going to be a lot of historical precedents that have not been followed over the past couple of years. Maybe they're not going to get followed into the next couple of years, given all the different types of volatility we have. But there are some historical arguments to say we should be bullish right now, outside of all the macro things that we're looking at around business right now as well. So, yes, this Zweig breadth thrust indicator. This might be one of the reasons we see the green that we're seeing. Pre-markets, look at a hoodie, 50.63. Okay, so what did I do on Friday? I made some moves on Friday. I finished my NVIDIA position. I bought 60 more shares at 107. So that was, so now we have 1,000 shares fully at 119. And so we got some of that. I sold, let me do the math right here. I sold on my Robinhood $100 calls that I got a while ago. I sold 15% of those. I sold 15% of those and I just bought stock with it instead. So I de-risked a little bit out of those Robinhood options. I still have them. So I have two set of options for 2027, 5570 spreads and then 9500 spreads. Obviously the 9500 spreads are a lot riskier. And I'm personally, just given all the volatility, not that comfortable with holding them. Sold 15% of those, basically at break even on Friday on the pump, took that money, bought Robinhood stock instead. So, and you know, Robinhood right now crossing over 50. So I still want it to be in hood. I just want it to be in the stock, not the options. Because at this point, I have no idea what's going to happen over the next year and a half and wanted to de-risk a little bit. The goal is to get rid of the majority of those $9,500 spreads after earnings. I think earnings will get a good pump. And then I'm going to take a look at the macro and see how good we are. But I kind of just don't want to be holding a ton of leaps on something that's already up a lot. I mean, Robinhood, again, had an incredible 2.5 years to expect that performance going forward, I would just rather be in stock versus have an expiration on my options to be able to see good performance. But so far it's working. 50-62. The market seems to be thinking that the earnings results that we're getting is going to lead to increased trading volumes, which they should be right about. When Google puts up the numbers they're putting up, even if the stock doesn't act in congruence with the results, you're going to have a lot of people that get excited and that want to buy Google. I still have my Google as well. The leaps that I have and the 100 shares, I'm thinking of buying more Google. I mean, the earnings were incredible, in my opinion, from every single. I can't find a single red flag in the earnings. The only red flag is that search revenue slowing down year over year, but that to me is inconsequential in regards to all the other parts of the business they have, and the fact that AI inside of or advertising inside of AI is going to be inevitable, and every company is going to have to incorporate that. I think Google will be a leader when that plays out. So I still think there are some pretty good opportunities in this market, but we have had a lot of momentum. Even Vertiv and VST were up 5-7% on Friday, just based on the data center momentum. Amazon and NVIDIA both said to CNBC with an exclusive quote, "We are not seeing any data center spend going down in terms of demand, and we want to increase our capacity for data centers." I think we're going to get the same type of energy on earnings. That's basically what Google said. Zucks is going to say that. Jassy is going to say that. And hopefully that will be enough for the market to think NVIDIA is not this cyclical thing that's not going to put up the types of revenue numbers that people are estimating for. But NVIDIA earnings towards the end of the month of May, we're going to see what happens with that. Rock Lab pumping right here. We got about 2 minutes until the market opens. Let me know if anyone bought anything on Friday, if you're buying into the strength, if you're selling into the strength. I cannot blame you. If you are selling into the strength, it is still very scary in terms of a lot of the different issues we've got going on in the macro. However, just from a pure kind of, I don't know, based on what I'm seeing, if this market has been so headline driven, if we see any more good headlines, even though we don't have any truth to the headlines yet, like everyone's saying we got all these deals, but the deals aren't here. If the deals finally show up and India's doing a press conference with the United States and they're announcing a brand new deal, I think the market's going to eat that up. I don't think the market's going to sell that news. Maybe the market's pricing that news in right now, but I definitely don't think the market's going to sell that news, even if they don't pump on that news. And so I do kind of think if you've held on so far and you bought the dip, de-risking is one thing, selling some covered calls is one thing, but completely eliminating exposure to the markets, especially given how strong earnings have been so far, I don't know. I don't think it's necessarily the right strategy here right now. So I think we are starting to get things to clear up, but we really need the deals to come in this week. We got about 30 seconds until the market opens. And if it does, then hopefully we continue to see a bit more of that momentum. All right, here we go. Thank you, everybody, for being here. Appreciate you all spending your mornings with me. I will be talking more about the Toronto meetup at the end of the show today. All I can say, very humbled, very grateful. We had about 170 people show up, and it was really cool to see the people that are watching from wherever you're watching in the world in person in a brand new city. I love T-Dot. I'm claiming that as my city. It was a beautiful city. I want to go back there again and spend some more time, but it was a great experience. Love seeing everybody. And now we are back to doing what we do, which is opening this market. Here we go. Monday, April 28th. Thank you, everybody, for being here. 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. Robinhood opens up $50.30 on the day. Absolutely incredible. We got up $50, which is nice to see by hoodies. SoFi, 1308, up 1.5%. SoFi getting some love as here as well, going up on the day as soon as we open. HIMS up 6.23%. My goodness. HIMS up 6.23%. That is a green day. Rocket Lab up 3.5%. NVIDIA down about 1%. So NVIDIA goes red. SMCI is up 1%. Spotify's up 0.5%. Airbnb's up a little bit. Oracle's up 0.5%. Amazon up 0.37%. Apple basically flat. Meta's up 2%. Meta, why is it pumping? Well, Google pumped. So Meta's probably going to pump. Meta's going to crush their numbers if Google crushed their numbers. The only headwind right now I see for Meta is the FTC antitrust case. And if that goes away, then it looks like Meta might be in the clear, at least for earnings. Palantir opens at 113, so down from 114 in the pre-markets, but we're still at 113, which is not bad. The S&P 500 up 0.24%. Again, the S&P 500 was basically up 7% last week, which was incredible. And you're seeing a little bit of that momentum continue. GameStop is down. Coinbase is down. Where's MicroStrategy? Some of these crypto names, MicroStrategy is barely up. Where's Bitcoin? Well, that's weird. Bitcoin's up nicely. Coinbase you would think would be up. Bitcoin right here, 95,137 again. Bitcoin crossing that 95,000 level. Robin at $50.60, up 2.3%. SMCI 37.35. Oracle 139.60. MicroStrategy 370. Nvidia trying to recover a little bit, but still down about 1% of the day. All the retailers, Walmart, Target, and Home Depot are green. Google kind of trying to go green. It's not really crazy, but Google right here is at 162.48. We got to 170 last week, so this one's still having a long way to go to get back to that earnings pump. SoFi 1321. They have earnings tomorrow. I'll be live at 7. That'll be a big one for SoFi. Rocket Lab up 6%, 23.75. Rocket Lab fell to 15 3 weeks ago. So if you took advantage of that dip, I sold some puts on Rocket Lab at around that $20 range. It seems like Rocket Lab's getting some momentum. Salesforce right here, 0.26%. That's up a little bit. Royal Caribbean's up 2%. They have earnings tomorrow. Broadcom's red. All the semis are red based on the NVIDIA headline, which I believe is that China's Huawei is developing chips in the same level of NVIDIA. That's what came out yesterday. I don't know if that's the only reason why the semis are down, but it looks like that's one of the reasons the market is transitioning a little bit more into software versus into semis. Oklo is up a little bit right here. Oklo, that's up 5%. Sam Altman did step down the other day from Oklo. That's giving it some momentum. Rivian's up 2.8%. Rivian kind of pumping with Tessie. Tessie right here is up another 1.3, 289 on Tesla. It seems inevitable this thing wants to get to 300, and especially if we get some deals this week. I mean, it's going to be hard to see it kind of falling all the way back to 240 unless the broader markets fall back as well. So you got Tessie right here at 289, Google right here at 162, Rivian at 12.99, Rocket Lab at 23.38. That's up about 4.5%. Amazon's going red. Weird. Amazon officially goes red. Nvidia, wow, down 2%. Nvidia going red as well. Certain parts of this market not in the clear. You got growth. Oh wow, Robinhood's about to go below 50. Did we get a headline? Did we get a Trump tweet just now? Or are these algos playing with our emotions? It might be algos. Wow. Got some nice red candles across the... Look, Meta just lost its entire... Look at this red candle, bro. 558 to 548. That entire green just got wiped out. Palantir just went red. NASDAQ went red. NVIDIA shares down 1.2%. Report says Huawei developed news AI chip. Okay, so that's what I thought. I thought it was the AI chip news that's hurting NVIDIA. Pakistan defense minister says military incursion by India is imminent. Is that the reason for the red? Pakistan and India are going at it again? I mean, that was a pretty nasty red candle across the board. I think that's it. Pakistan defense minister says in a normal armed conflict, both countries should refrain from using nuclear options. Oh boy, dude. Why is he saying a normal armed conflict? Are we normalizing a war? What? Goodness gracious, bro. You try to get rid of one war, another one pops up. It's like whack-a-mole with freaking wars, bro. What is going on? Did we not learn anything from World War II? We can't keep fighting. Oh my goodness, dude. That headline came out 4 minutes ago. Maybe that news was a little bit delayed as we just saw this red basically 30 seconds ago. Look at NVIDIA 108. Holy crap, dude. Pakistan and India. I mean, obviously there was a massive terrorist attack last week, and that was something that, was not good to see. I could understand a country wanting to retaliate. Does that turn into a whole war? I mean, admit it's because you watch World War II documentary. No, but this is how it starts, bro. It's like one country does something to piss off the other side, and the other country says, all right, screw it, we're going to war. And then it just turns into, and in World War II, it just happened across the entire world. It was, so the idea that we would have a World War III again, it's like so many things would have to go wrong in terms of other countries hating other countries and then deciding it's just time to invade or attack. And we've had that in certain parts of the world. It's not been a worldwide phenomena yet, but it's not good. It's definitely not good for markets, obviously. Palantir right here trying to go back to green. We're getting some green candles. Now, the reason I would say we might get these green candles back is because every time there's a war headline, the market tends to buy the news on that. Like almost every, I think there's been some historical stats on this, but like, I would say like 85, 90% of the time, whenever you get a war headline, markets pump on that. Even when the Russia-Ukraine stuff broke out in 2022, I mean, it wasn't good for the overall economy, but on those days when the news came out that Russia was invading Ukraine, markets pumped. So market tends to buy that news, but in the short term, there is a little bit of a sell-off that happens because with Rocket Lab losing its majority of it's pumped from 5% up here right now to 2%. 5,500 on the S&P. Is the S&P red? The S&P very close to going red. 55.1. It was up almost a third of, almost a half a percent. Now it's up 0.10 basically. So 0.1%. We got to see if it gets there. Kai, what's up? I see you in the chat. Thank you for being here. She says, hi, Amit. Kai from Toronto. Kai brought her dog to the meetup, which is absolutely incredible. She emailed me. She's like, hey, can I bring my dog? I was like, yeah, bring your dog. It'll be fun. We can see a dog. So shout out to Kai again. I'll talk more about the Toronto meetup later, but it was really, really cool to see a lot of people. Real quick, this was Kai and her lovely dog. We got the dog to turn his face for the picture by like giving the camera guy some treats. So shout out to Kai. Thank you for being there at the meetup. It was super fun to meet you in person, and appreciate you taking the time to show up. S&P 500 right here, 551.35. Tesla 291. So Tesla's still pumping on this, not really going red. Coinbase is down. Nvidia nasty 2.5% on the day, getting hit. Damn, I want my dog to meet Amit. Dude, I would love to meet all your dogs. I want to get a dog. So I'm turning into I've always been a dog person. I'm not really too much of a cat person, but hopefully when I move out, I can get a dog as well. SoFi right here, 1309. Hoodie turns red, 49.41. We will talk about our hood expectations on earnings today with Tanner and Roy on the weekly podcast. So at around 9:30 tonight, we'll go through all the numbers. And look, I think hood's going to crush. I'll show you guys all my numbers today, but based on the calculations I've done, I think hood's going to crush. It's a question of April numbers, and it's a question of how Vlad talks about the volatility in this market and if Robinhood can benefit off of that. And I think if he can paint a really good story with all the different product innovations they have coming out, the prediction markets, etc., then I think there's a world hood can keep pumping. But we've already got a nice little pump going into earnings right here at 49. So I don't think it's too bad right here for hood. Pepsi's up about 1%. American Airlines is up 1.3%. Ford's up about 1%. Celsius 1.63%. Delta, JetBlue, United Airlines, all of those up about 2%. So we're seeing the airlines get some love. Look at Tessie run 291. Looks like those green candles are coming back, folks. Not on Nvidia, but on everything else. SMCI right here up about 1%. And then Tesla 291 on the day. Where's AMD? AMD, I think, is still red. AMD, yeah, that's red, but we got green candles coming from a bounce on 95.30 on AMD. Oh, Grab. Where's Grab? Let's look at Grab. I forgot, dude. We have Grab earnings tomorrow. That's a big one. Wow, 480 on Grab. We're finally back into the 480s. This is when I initially started buying, and then I DCA'd all the way down to 440. I did buy in that 330s, 340 level as well. So if anyone took advantage of that dip, you've got a little bit of momentum right here. I think Grab crushes it on Tuesday. If they don't crush it, we're gonna go down, or we're gonna be flat. But I think it's time for them to take the sand out of the bag and stop sandbagging here. And we need to really see some increased guidance, which I think they're gonna do because they pretty much admitted on the last earnings how much they were sandbagging. I mean, it got to the point where every other analyst kept asking one version of a question, which deduces down to, hey, are you sandbagging? And it was just hilarious me listening to this in February because you got the CFO trying to explain why they are not sandbagging, but they are sandbagging. And it's like, obviously, they're trying to set up a beat and raise for the next couple quarters. So I expect a pretty strong beat and raise. And if we can get that, hopefully the market reprices it. Tesla right here at 289, Google 160. Google just went red. Rocket Lab trying to hold on to plus 2.3%. NVIDIA is now 108. Google down about 1% here right now. Time to take the sand out of the bag. Really, Amit? Yeah, dude. This is, your boy went to Toronto, drank some good Toronto water, and the jokes are just coming easier now. So I appreciate. I mean, the biggest one last night. I don't want to say it here because, well, I'll just say it because I had my moment last night. I don't need to have my moment again. But all I'm saying is I think Google's stock price needs to be up way more. And if it is, I think a lot of us will benefit from that. So based on those earnings, it feels very unlikely that the stock continues to be down the way it is. But the market is disrespecting here. I think it needs to be up way more. I really do. And I think Grab needs to take the sand out of the bag and stop sandbagging. So if those two things happen, hopefully we get some nice momentum. Tesla's still holding on to 290, bro. Holding on to 290. It's not really getting hit right here. Even though NVIDIA is getting hit as well. GameStop down about 0.19, Nvidia 2%, and then Domino's right here down about 1%. By the way, speaking of Chad, so Chad came on the market close on Thursday, and I'm going to be clipping the 10-minute impromptu interview that we had, and I'm going to be putting it on the channel for those that haven't seen it. Chad explained Palantir's newest product, which is like vibe coding and AIP. If you don't know what vibe coding is, you'll learn more about it when you see that interview. But it continues to give me confidence that Palantir is just at the cutting edge of a lot of the new technological changes we're seeing in the AI era. And so that part will be clipped. It'll be posted on Twitter and YouTube in a little bit. And if you guys missed that interview on Thursday, you'll see what Chad had to say. Speaking of Palantir, 113.65, still up 1%. Let me check resistance at 114. Kris says retail seems to be buying this dip. So JP Morgan put out some more research on Thursday, Robinhood back to 50, and they basically concluded the same thing. They said, we believe that hedge funds have taken their exposure down the worst, specifically towards the Mag 7 in over 2 years, and then overall to the broader market in about 5 years to de-risk. Retail has bought this dip. We don't have April data yet, but in March, retail bought $40 billion of the dip, which was the highest month since 2020. If April goes higher than that, then I mean, retail seriously has taken momentum from this opportunity. And maybe retail is going to be right on this. 114 has 19,000 shares sitting for us to breach above that level on Palantir. Currently right here, 113.75 on Palantir. NEO's up 8%. Wow. NEO's up 8%. Yeah, NEO's getting some love too. Where's Baba? Baba's at 120. Okay, speaking of NEO and Baba, we do have some China updates. Again, we talked about China this morning, but the main thing that I think is important around China, we talked about yesterday how Temu and Shein are going to be raising all their prices for a lot of random stuff that Americans, for some reason, love to buy super cheap. Well, here's an example of that. So this person was ordering a dress off Temu. The dress, after all the discounts, is $22.18, which one could argue is reasonable to pay for a dress. I don't know how amazing the dress is, but you know, $22, it's like, okay, you pay $22 for a dress. The shipping is free. The sales tax was $1.13. If you calculate 145% of $22.18, you get $31.45. If you add 31 and 22, this dress is now $54.75. So if Trump's paradigm for American reindustrialization and growth is that someone should go to an American manufacturer of clothes and pay the same $54.75 versus paying Temu and Shein $54.75, maybe that's why he's trying to do what he's doing. Now, granted, that begs the question, will dresses in the United States cost $54.75? Because a lot of those dresses are made with fabric from India, China, Bangladesh, Pakistan, where a lot of that fabric comes from in terms of the raw source materials. So if that stuff is still tariffed, the American companies might still mark up their prices. And it's this big economic experiment that I guess we're going to see play out if people actually choose to leave the brands that they know so well, like a Temu and a Shein, and they choose American companies. And if those American companies can even be competitive with the 145% tariffs that we have right now. Look at the S&P, 553. We're up 0.5%. Hood's got to be above 50. Yeah, there you go. Back above 50. So it seems like that Pakistan-India headline lasted for like 3 minutes, and it was bought up again, which is what tends to happen with these war headlines. Wow, SoFi, 1334, up 3.5%. Airbnb is up 1.3. Hims is up 30.82. Grab, 490, almost 488. And then Palantir, very close. Oh, no, we hit 114 on Palantir. No, that's pre-market. Sorry, that's pre-market. That's pre-market. Yeah, we didn't. 113.65. Pre-markets, we hit it. We bounced from 112.04. Now we're about 20 cents away from 114. Wow, not a bad day. Not a bad day. Do we have any macro data coming up? Let's see. We do have a ton of data this week. This morning we have nothing. Tomorrow we have consumer confidence. But this morning, nothing that we're seeing right now. In terms of the Shein and Temu stuff, I actually think it's not the worst thing in the world for Americans to stop buying a lot of that stuff. Like, at the end of the day, this is the part I do agree with the Trump. It's like, we don't need to be buying useless stuff from Temu and Shein. Now, the question is, as an American consumer, the only reason the world loves doing business with us is because we buy useless stuff, and that's baked in our DNA. Can Americans actually take that out of their DNA? Well, how high can prices go? And the other question here is, if let's say the best case scenario, we stop buying the useless stuff and China's companies really start getting pain because they lost their biggest consumer. Does the useful stuff start going away? Because if the useful stuff, like the stuff we need on our shelves in grocery stores, goes away, no one's going to care about a dress being $50, but we are going to care about the fact that we don't have the basic needs and necessities in the United States. And I think that is yet to be seen. Palantir busting through 114, baby. Boom. Took away those 20,000 shares, 114.20 from 113.80 to 114.20. Nice 50-cent swing in the span of about 30 seconds right here. We are in the 114s on Palantir. Did Hood get 51? Hood got 51. Wow. Hood got 51. Palantir got 114. Basically together at the same time. NVIDIA is actually recovering a little bit. NVIDIA went from 108.50 to 109.40. It's still down 1.5, but not down as bad. Snapchat, I did buy Snapchat, by the way. I'm going to swing trade on Snap. I bought Snapchat at 870 last night. It's at 882, so that's working out. I bought it at like 12 a.m. in the overnight markets. I told you guys on the future show I was thinking of a swing trade on Snapchat. There's no thesis. The thesis is if you look at Snapchat's chart, the last time it was below $8 was September 2023, outside of April 8th, which it was below $8 for like 10 minutes. I don't know, dude. I think Snapchat's bottomed, and I think Snap Plus is growing. I think their earnings are decent. They're now gross profitable. They're gross positive profitable, even though they're not net income positive, which I think sets them up for a good GAAP profitable quarter if they can get it. I don't know if they're going to get it, but I don't think they need to get it. And daily active users are still growing. So I don't love the company, but I think at $8, like the upside to 11, 12 is there on a good earnings tomorrow. And so I'm in for 1,000 shares on Snapchat. We'll see if we can get a swing trade out of this. Where's Tesla? Palantir 114. Tesla, wow, 294. Let me check 295 resistance on Tessie. What a story, eh? What a story on Tessie, eh? That's incredible. 294.30 on Tesla. I mean, this thing was 220 or 250 before earnings. Most of the world predicted it was going to go below 200 and just didn't play out that way. 295 resistance on Tesla, 51,000 shares. 51,000 shares on Tesla, which doesn't seem like a lot. It doesn't seem like a lot on Tessie. 294.17, Robinhood 50.83, Snapchat 883, Google 162, Grab 484, S&P 553. Looking like we're holding up the green. Let me see if we have any new headlines coming in. European electricity problems, that still is an issue, and that hasn't changed yet. No one really knows the reason for why. Portugal and Spain lost their energy, but that one still seems to be a big issue. Oh, Ukraine just proposed a full ceasefire for at least 30 days. Don't know if Russia's going to agree to that, but Ukraine apparently just proposed a ceasefire for 30 days. Trump did meet with Zelensky at the Vatican for the Pope's funeral over the weekend. There was a pretty iconic picture of them just talking privately around a deal. I mean, look, I don't know if Trump's going to convince him to basically give up Crimea. Wow, look at that red candle on Palantir. Holy crap, 114.40 to 113.76. You got a lot of algos and possibly a lot of people just selling into that strength on Palantir. Yeah, look at that, dude. Nasty red candle. But it was also a really good green candle up to 114. So very volatile to the upside and to the downside here. But yeah, I don't know if Ukraine's going to agree to the proposed peace treaty that Trump has put out, which essentially takes away Crimea. I mean, we're going to find out, but as of now, nothing has been agreed to yet, but Ukraine is proposing a ceasefire for 30 days. We just got that headline right now. S&P 552, you got some more red candles right here. Tesla 294 to 291. Wow, dude. These algos are moving in unison with each other, and it looks like something happens for them to move so congruently up or down. I don't see a new headline, but there might not be headlines. It might just be going up aggressively and then down aggressively as well. HIMS is back to 30. Okay, so HIMS has earnings this week as well. HIMS 30.20 up 7.4%. I think HIMS is cheap. I know I don't own it yet, and a lot of you guys want me to own it. I don't know, dude. We'll see before earnings and see if there's anything here. HIMS right here up 7.3%, but you've had a great opportunity to get in if you wanted it in this volatility. It didn't go below 20 though, which has been nice. I mean, it's held up below. I think the lowest it got to was 22. So for those that took advantage of it at 22, you've been able to get momentum on it. Let's see. What else do we have? I mean, I think those are some of the main headlines right now. If we go green, that means it's going to be 5 days in a row of green markets. If we close even 0.1% green today, Robin right here, 50.27, we will be green for 5 days in a row, which we haven't seen for a while, basically for the past 2 months now. And if that happens, I think markets will be excited. Yeah, S&P was up 0.5%. Now it's up 0.27%. So a little bit of those red candles coming in. Let's see if Trump said anything. I don't think he did. The main thing this morning he said was about Canada. Oh, he's going to be at a campaign event in Michigan tomorrow at 6 p.m. Eastern. At 6 p.m. Eastern. All right. So, well, it's not really a campaign event, but it basically will be a campaign event. Warren, Michigan. Trump will be there tomorrow. And I'm assuming he will be talking about his first 100 days. ABC, again, will have an interview with him at 8 p.m. on Tuesday as well about those first 100 days. So if I right here, 1328, that's up 3.07% on the day. Bitcoin's getting a candle down. Yeah, that's true. Bitcoin 95.5 to 94.5. Let me check the 10-year. It was doing really good on Friday. It's up a little bit today. Nothing that concerning. 4.272. You know, I don't even think these red candles are based on headlines, dude. I think it's just like violent moves up met with violent moves down. And it really does feel algorithmic. I mean, it doesn't, unless we're about to get a headline soon, it doesn't really feel like we should have pumped this much outside of the Bessent good interview that he gave. But it also doesn't feel like we have to give away too much of it outside of people just selling into strength. So it could be the Bessent news that people are just selling into for a little bit as the explanation of this. By the way, HIMS up 7%. So HIMS is not giving up any of its green. AMD is turning slightly green. NVIDIA, unfortunately, still red on the day, 1.5%. That one not going green yet. Jolts is tomorrow. Okay. That's going to be a big one. So we're going to need to see job reports and what happens. Amit, your thoughts on MongoDB? I don't have specific thoughts on this one, but I think SaaS in general, based on what ServiceNow showed, I mean, we should have a good quarter for SaaS companies. ServiceNow at 950 right here. MongoDB in general to me is not one of the more exciting SaaS companies. I've used the product before. It's a great company. I just don't think it's that interesting in terms of a growth play. But all the SaaS stocks pretty much up on the day except CrowdStrike and Cloudflare. CrowdStrike, by the way, got to 423. I mean, this thing was at like 350 a couple weeks ago. So this one really getting some love. But Snowflake, Datadog, Palantir, all of them, Adobe going green. Adobe apparently is getting some love. Jeremy, half of his Tesla stock proceeds, he put it into Adobe, which is interesting. I've never loved Adobe just as a pure growth story. I do think it is undervalued. I will not disagree there because the market's discounted it pretty heavily. But I think things like Canva are kind of taking away from the overarching growth story. And the AI part of it is not that exciting to me either. But I can understand why, from a multiple perspective, it seems cheap right now. Bitcoin right here, 94,000. Robinhood going just below 50. And we are starting to get a lot more red candles across the board. Mag 7, Meta 552. Microsoft goes red. Google goes red. NVIDIA's red. Amazon barely holding on to its green. Tesla 295 to 289. So that one trying to hold up. And then Apple right here at 210 as well. Who's buying Tesla right here? Who's buying Tesla? Put in the chat if you're buying Tesla at these levels at all. I think, I'm bullish on Tesla for the future. I think robotaxis and Optimus is going to be pretty amazing. Optimus is kind of my big thesis, but dude, that earnings, it's tough to just overlook those numbers, especially knowing that Q2 numbers are probably going to be worse and say, I'm in. And so I don't know, dude, like if Palantir had a bad quarter, I would say they had a bad quarter, right? Like I'm going to be objective about it. If they have a crappy quarter, I'll say they have a crappy quarter. If the stock runs in the midst of the crappiness, I will say I don't understand it. But for the past 3 quarters, Palantir, and given the comps were low, so let's just put that as context, 2023 comps were really low, which is why Palantir has been beating so aggressively. If they can keep that up in this year, then it's going to be a really fun year. But they've been having phenomenal quarters. Now, the multiple on the stock obviously is expensive, but they are putting up some pretty serious growth, especially in the SaaS space. No other AI company is growing 36% on top line not just in like their like ServiceNow is growing 400% in AI revenues, but not on top. The top line is only 19%. Palantir is growing above 30% in top line. Tesla's not growing at all. So like this pump to me is kind of just either retail FOMOing in or money managers, which were so bearish 2 weeks ago, deciding that the earnings doesn't matter anymore. I mean, it is quite unexplainable, to be honest. But whatever it is, it is. B-Saw right here, he's been a big Tesla shareholder for years. He says, if those earnings couldn't tank Tesla, IDK, what does? I agree. If those earnings, if you miss by EPS by 36% and you don't give any Q2 guidance, if that does, oh, by the way, the Model 3, they're giving you 0% APR in the United States and they're taking off 10%. You get a 10% discount and you get 0% APR. I mean, come on, bro. That reeks of desperation. Like they're not going to have margins in Q2 either. So it's great for the consumer if you've been thinking of getting a Tesla. I mean, here you go, 0% APR. I got my Model Y with 0% APR, so I loved it. But they're definitely pulling out old stops to sell these cars, and the market doesn't care. The market doesn't care. And I know people are saying, "Oh, well, like think of Tesla outside of an auto stock. It's like more than that." Like, yes, obviously it's more than that. But even those parts are not really putting up any earnings growth yet. And if there's going to be any significant earnings growth, it's probably a couple years away. Like 2026 is not going to have some massive, $100 billion revenue potential from FSD or robotics. Like that's just unrealistic. It's not happening in 2026. And Elon basically said that on the call. So it's a couple years out, and the market's bringing in that growth right now. And maybe it's just fundamentally being repriced. That could also be something that's happening right now. Robotaxi starting in June, but everyone has to remember, dude, Robotaxi is going to be very limited in Austin. It's not going to be like you flip one switch, all the, 500,000 Teslas that are available in Austin get an ability to turn on Robotaxi features, and then you have just a bunch of Teslas on the roads. Like this is Tesla's first time having unsupervised FSD pick up people and drop them off to locations. This is going to take some time. Like it's not just going to be one switch, boom, everything goes. Now, eventually that can happen because that's the nature of Tesla's software model where they can push some code and then boom, you've got millions of cars on the road. But that's not happening yet. And it's also happening in one city. So the idea that Robotaxi is going to expand to a bunch of cities by the end of the year, maybe, but they barely have the registrations and licenses they need in California to start by the end of the year. Even though Elon's optimistic about that, but we're going to have to see how it plays out. So look, I think there's a lot of growth vectors. I just don't see the earnings changing anytime soon. And yeah, it doesn't have to go back below 200, but it is pretty incredible that it's pumping all the way up basically to this $300 level. And so the market is definitely pricing in some more future growth. We are getting red. Let me see if we have any headlines. I don't see anything. Pretty much Tesla lost all of its gains, 295 to 285. I don't see any news to explain this. Where's fear and greed? Let me check that out right now. Fear and greed. We were at 29 on Friday. We're at 40. Wow. Okay. We're still in fear, but we're at 40. Hood just went red as well. Yeah. Whole market took a little bit of a haircut right there. I mean, most of these stocks are flat versus like red, but they are red compared to where they were here today. What's your expectation on Hood earnings? We will talk about it today on the weekly, but my expectation is they crush it. And if we have some decent guidance, hopefully the market can give them some momentum. But this is why I don't want to really be heavy in Hood options. And I'm a bit too heavy in Hood options right now with some strikes that are pretty aggressive. One of the reasons I don't want to be too heavy is just because you just don't know, bro. You just don't. At this point, like maybe we get into a super bull market and we go back to the moon. That's fine. And I miss out on some gains, but I'd rather be more in stock because I just think the next couple of years are going to be pretty unpredictable. And so I still have my Hood options from 2023, but they have a $20 strike. And I think by January 2026, we'll be above 20. But aiming for, an aggressive strike like 100 or 90 bucks, I don't know. You might not be able to see that if we don't have the bull market that we want to get. MicroStrategy goes down 2%. Grab goes down 0.31. Google down 1%. Google continues to get discounted by the market. Elf is up on the day. Disney's up on the day. Verizon's up a little bit right here. CrowdStrike just went red, 419. Celsius just went red. And you have the airlines that are still up. So you have airliners and retailers that are up, but tech, Palantir 112, starting to go red. I'm trying to find out what happened. You guys are asking what happened. I don't see any major news. By the way, IBM did announce this morning they're going to invest $150 billion over the next 5 years in the U.S. We missed that headline. IBM stock, it's up 0.35%. All right. So I'm surprised Trump hasn't tweeted about that. Headline is IBM announces plans to invest $150 billion in America over the next 5 years. You would think Trump takes advantage of that headline, but he didn't say anything yet. Broader market still red. No, I'm not seeing the headline. I'm not seeing the headline. Japan said this morning that our stance is that we want tariffs to go to 0 from the United States. But the prime minister said that 2 hours ago. So I don't think that's the headline. By the way, MicroStrategy, I'm looking at this right now. They bought 15,000 Bitcoin today. Holy crap. MicroStrategy down 2%. They bought it at 92,000. They spent 1.42 billion last week. So you had Saylor, who again continued to take advantage and buy this dip. Daily gains went from plus 30K to negative 1K. Yeah, I was up 19. Now I'm up 7 on the day. By the way, I would imagine a lot of people are now green year to date, right? I mean, I'm green year to date. I think a decent chunk of you have gone green, or you're down like very slightly, 1 or 2% maybe. But that negative 30%, negative 20% that we saw over the past 2 weeks, I think a lot of that has started to get cleared up for most people. Here right now, S&P just went red. The QQQ, NASDAQ as well just went red as well. Okay, 471 on the Qs. Okay, some of you guys are still pretty red. Other of you guys are green. Oh yeah, USD. Yeah, negative 10% because of USD. The people around the world, the FX stuff can definitely affect the year-to-date returns. The dollar is up today, 99.50, so that's good. By the way, I mean, I was loving my US dollar in Canada. That was great, dude. Things were pretty cheap compared to the States. It was funny though, because like my credit card was showing me the dollar price, and then I had to do the conversion. So I thought I was paying like, I don't know, $9 for a coffee, but when you convert it, it was a lot cheaper. I was like, oh, this is not too bad. So it was nice to travel with US dollars, but we're going to have to see how much those FX changes continue to affect the broader market. Tempest AI right here, that's up 2%. Starbucks up 0.54. They have earnings tomorrow as well. Chris, thanks for the $2 super chat. The Pakistan and India conflict. Yeah, we talked about that news 30 minutes ago. I don't think it's that relevant anymore in terms of like meaningfully affecting the market. It could become relevant pretty soon, but that initial headline, the market reacted to it and moved on. So I don't think that's it, but I don't know. We're going to have to see what else is going on. Let's get an update right here, and then we'll keep going and see what else we've got going on right now.
Okay, but what they're saying about the future, what they're saying about tariffs, what they're saying about the spending environment for consumers, and what they're saying about their plans for spending themselves. Because that's the big question mark, I think, over the entire economy right now. What are big companies doing? Are they hunkering down? Are they cutting costs? You know, I've been talking to CEOs. We're in this mode of we are controlling the controllable. We're controlling what we can control. We can't control the tariffs. We can't control the exchange rates in the markets. We can control cost. That's one thing. And, you know, it's interesting, guys. We have not seen in the weekly jobless claims number any kind of spike in layoffs. That's a good thing. But we are starting to see signs that the cost control is materializing. How about this Torsten Slok from Apollo chart on CapEx plans? This is capital spending plans for companies. He took a look at all sorts of surveys and how companies are thinking about, you know, what they're doing with their CapEx. The important thing is, and there's lots of lines because, you know, they're from all different sources. They're from, you know, the NFIB, the Small Business Survey. They're from the New York Fed, you know, that survey of manufacturers. It's coming down. We're not at recession levels, as you can see, those big drops around, you know, COVID and bigger drops during recessionary periods, but we are trending lower. So watch out for productivity cuts on the earnings call because, you know, while they've slowed their hiring, they haven't actually laid off. And that's the sort of the next thing that the market could worry about or the Fed could worry about.
Yeah, I mean, I don't think the street expects any clarity really, or a lot of conviction in the management guidance. I have continued to note though that stock reactions to the earnings we've gotten so far has been more benign than history has said. So FactSet says the beats are getting rewarded more than average. The misses are getting punished less than average, at least right now. This is the test, though, this week, in terms of the critical mass of companies. Here's where the market is. I decided to show we recouped half the losses from February to April. And that circle right there is the April 3rd drop in the S&P 500 after we got the details of the tariffs. We're in that circle. Okay, we've risen right into that gap. No, not all the way back, but we're in that gap of 4 to 5% of that.
Intel's up 5%, just started surging. I have no idea why. I think there's got to be a headline right here. What the hell's going on with Intel? Those earnings, by the way, I thought they were pretty good earnings. They beat by 13% on EPS, and market took them down 7%. But you've got a lot of red across tech, and then Intel right here getting up 5%. I don't see the reasoning for it. It happened kind of just randomly right here. I don't see the reasoning of it, but it's getting some green. Bitcoin 94,360. Again, Palantir 111. Palantir's now down. Nvidia's down 2%. Grab trying to hold on to green. S&P barely holding on to its green. And then Robinhood 49.39. Robinhood goes red as well. Tesla basically getting ready to go red. 286 from 291. Either we flip green here or we continue the red, but I still don't see the headline that's creating this outside of people just selling into strength.
One-day move. So we closed on April 2nd at 56.70. So, 130 points up from here, 140 points up from here. And so this is the decision point. For me, this is where the rally has to go from relief to belief. We've got relief. We're not going to see the most extreme version.
I like that. Relief to belief. I like that. This dude might have consulted with me this morning for that line, and I chose to give it to him versus use it on you guys. But relief to belief. If we can get some more belief in this relief, then I think we start to get some more momentum.
Of the punitive tariffs, you got relief that the bond market has calmed down, relief that in the here and now the economy has kind of hung in there, whatever pull forward effects we're getting in spending. But then after this, you have to believe that you're really going to get some backtracking on tariffs. You're going to get some deals. You're going to essentially be able to preserve the economic resilience as opposed to take on damage. So it's a race against time on some level in that sense.
I mean, this is what the Treasury Secretary was talking about this weekend when he said, yeah, everyone talks about the big market downturn and the confidence plunge, but the fact that we've almost come all the way back and we're almost positive for the month of April. The NASDAQ is, the S&P barely there.
Yeah.
People aren't talking about that as much. They have.
Well, we dropped 8% going into April 2nd in the S&P. So yes, but you're absolutely right. In terms of once we've known the initial version of the plan, you've kind of recovered there. And the question is whether that's something you want to extrapolate from here. I mean, we've come back to 20 times forward earnings on the S&P. We got down to in the 18-ish zone. Do we expect we're going to rebuild to 23 times earnings, which is where we were a couple of months ago? Given that we don't really know what we're working with on earnings, I think that's now the question in terms of further upside.
I mean, they're not reflected in the S&P, but I don't know if you guys saw this from the Toy Association over the weekend. America's toy companies are hurting. They're in trouble. You know why? Because our toys that we buy here are made in China. And so there was this survey. They surveyed 400 of their members. And keep in mind, this is all small and mid-sized businesses. That's what the toy companies are. They're not public. Like, there's Hasbro and Mattel, but that's it. They're small businesses. Here's what they're doing versus mid-sized businesses, which are in blue. Yellow is the small ones. Majority delaying their orders. I mean, they cannot pay these tariff rates. Where are we? 145%. Coming from China. They're canceling their orders, especially the mid-sized toy companies. And then there was a question about will go out of business within weeks or months. And you've got almost half of them, both small and mid-sized companies. The good thing is there's engagement in the White House there was a meeting, CEOs, Target, Walmart. They were talking about toys. They were talking about baby products, talking about, how the orders start for the holiday season.
Yeah.
And I think there are some concerns that there will be shortages on the shelves because this is, as the Secretary of the Treasury said himself, there's a trade embargo right now on China because the rates are just so high and unsustainable.
So that goes to the point we were talking about in regards to Shein and Temu. Shy, think of the $5 super chat. That is the goal. I manage sales in the industry, and companies like Shein, TikTok shops have wrecked local mom and pop businesses. This is good. So there might be one argument that the Chinese manufacturers of very cheap goods like dresses or we looked at like a bunch of different random things last night on a chart, toys, for example, which might be cheap as well coming from China. If those companies have to pay some pretty aggressive tariffs on their toys or their random knickknacks from China, you might start procuring it locally from the United States. Now, it comes down to a question of where is the cost parity and if the United States actually can be cheaper than China. But if it's the same price, if a toy from China now costs $25 versus $15 because of the 145% tariffs, and an American toy, the cost of goods for that is also $25, maybe the idea is you go to American Toys. But if the American toy costs $30 or $35 because of whatever reason, based on importing the raw materials, etc., that could still mean that the actual impact of the tariffs aren't shifting people to like local mom and pop businesses or to the United States. So it's one of those things where it's a big experiment. It's a big experiment, and we got to see how this experiment plays out. But if it does go to the upside, then I don't think that's a bad thing for America. I do think we should probably not be getting some of the stupid cheap stuff from China, and we should be sourcing in the United States. But again, it goes back to one of the first charts I showed this morning, and I really don't know what the implications of this are going to be. But shipping, right? How bad are the things on our shelves that we need as everyday citizens? Are they going to go away? And are they going to go away anytime soon? Again, 44% ships have decreased in volumes in ports in Los Angeles and Newport, which is an issue. This is the biggest price jumps observed for the most popular items. You have thick kitchen cleaning towels. Instead of $1, they're going to be $6. Wax strips, eyebrow gel. I've never heard of eyebrow gel, but apparently that's a thing. Razors, chicken meat shredders. I mean, all these things that you could order from Temu for a couple bucks, they're going to be going up. And it might lead to people buying stuff from the United States instead. So I guess over the coming weeks, this is what we're going to have to see. Shai says, if pricing is close, Americans prefer made in the USA. I agree as well. I think Americans definitely would prefer to buy United States goods, especially if the quality is a hair better as well. But how bad do the prices have to get? And I think the broader question here is like, let's say, you were going to buy a toy from China and you were going to pay $20, and now that toy in America is 22 or 23, right? Maybe it's up a little bit, but not up as much. What if you just don't buy the toy? What if you're like, you know what, screw it, I just don't feel like buying the toy? What does that do to demand destruction? What does that do to the consumer confidence? And more importantly, what does that do for inflation? Because if that brings our inflation expectations down, and we're going to get some data on that in the next coming weeks on what's happening with inflation. I think in about 10 days, we get CPI data. That could be an argument for J-Pow to cut rates, even though he's been very hesitant to cut rates. The probability for a May cut is now 6.9%. For June, the probability is 57.9%. If the tariffs end up being deflationary because of decreasing demand, that is the reasoning for the cut. And I wonder how the market reacts at this point. You have good earnings, decrease in inflation, but also decrease in demand, which could affect, obviously, earnings because people might not be traveling as much anymore, which means United might not be selling as many tickets. That will definitely be impacting the broader earnings picture. What is the minimum wage for people to afford those made in the USA? It's a good question. I don't know. However, a lot of people don't know. Like my mom didn't know this the other day, but she was shocked. She couldn't believe this. The minimum wage in America federally is $7.50. She thought it was like $20. I was like, no. Some states like California and New York City mandate $15 to $20. I think California is even a little bit above 20. But federally, it's $7.50 an hour. So, and they've been trying to change this for like a decade, but no legislation has been able to change it. So, I mean, if you're making $7.50 an hour and the cost of everything for little things you need in your house go up, it's just going to be really hard to buy those things. So you're just not going to buy it. That extra towel that you wanted to buy, if it's now aggressively priced, you're just not going to buy it. And I think the implications of that have yet to be seen. And we're going to have to see how this begins to play out. Now, Trump, again, was boasting a lot about the tariffs last night. He did an interview when he came back from the the Vatican, and his major argument here was that we are going to get tons and tons of tariff revenues, which are going to lead to people not having to pay taxes. I think that's a bit aggressive in terms of making the argument that people, he said, if you make $200,000 or more, you won't have to pay income tax if the tariffs end up working out. Look, maybe, but income tax accounts for about $2.69 trillion. We've collected about $60 billion in tariffs. The idea that that goes away is hard to imagine.
One more on Zelensky. The last meeting you had was pretty rough. Did you sense a different attitude now? And if so, why?
Do. I see him as calmer. I think he understands the picture. And I think he wants to make a deal. I don't know if he wants to make a deal. I think he wants to make a deal.
Thank you, sir.
Did you talk to him about tariffs yesterday? Did any foreign leaders approach you and ask for...
I did, and you probably saw. I think every foreign leader approached me and said hello. And a lot of good relationships. And we're going to be taking in a tremendous amount of money. We're going to be taking in a lot of jobs, a lot of plants and factories. They're already coming. I mean, you see it. And we're going to make a lot of money, and we're going to cut taxes for the people of this country. It'll take a little while before we do that, but we're going to be cutting taxes, and it's possible we'll do a complete tax cut because I think the tariffs will be enough to cut all of the income tax. Now, we have a lot of debt that's been left to us, unfortunately, over many years. We'll take care of that, but the tariffs, if people only understood the tariffs, we're going to be giving people of this country a tremendous tax cut. And we're going to start with people making less than $200,000 a year.
So again, it's just hard to imagine that's going to play out. Now, Adam brings a good point. He says that $2.69 trillion comes for all income taxes, not for people making less than $150K. That's fair. However, the majority of Americans make less than $200,000, right? So there's $2.69 trillion we collect from just income taxes. The majority of Americans do not make $200,000 a year, right? I think the average salary is like $54,000 or something like that. So yes, you've got a lot of wealthy people in the United States paying a lot of income tax. But the point is, how much tariff revenue do we realistically need in order to be able to get people that are making less than $200,000 a year to pay zero in taxes? And I don't know what that number necessarily is, but it's a lot higher than 50 billion, which is what analysts are saying we're going to collect over the next couple months. You would have to get into at least, I would say, the multi-hundred billions, 400 to 500 billion. And then you would have to get Congress to approve the idea of completely changing the tax code. I mean, I just think paradigmatically, ideologically, it makes sense. You collect money from China instead of your own citizens. But to actually enforce something like that after the tax plan that we've had over the past 70 years, it would be a pretty big change to the tax code. And if it happens, then I guess Americans would be happy with it. But the question is, tariffs would have to work. And then in the midst of the tariffs decreasing the need for income tax revenue, you would have to see, is demand going down, right? Because then the only way to get demand back up is to not take as much money from people. But then it just gets to a question of, are we at parity? If demand is down, people have money for their from saving from their income taxes, but prices are still up, right? Like, what actually changes in that scenario if we just take away the money from us to the external companies or countries around the world, if prices continue to just simply go a lot higher? Kris, good morning. No hat today. I feel like that's bullish for a reason.
No, man, I just couldn't find it this morning. That's all.
What's up, man?
Dude, this tax thing is such a moronic thing. I mean, the only people that would believe in that is people who have no idea how like economics or taxation actually works.
All right, just break it down for us. Explain what's the issue with what he's saying.
Okay, so first and foremost, if you put on a tariff, that is a consumption tax, which means that if you, right now, I think someone said it in the chat, 50% of the American population does not pay any income taxes anyway. But what they do is they do pay sales taxes, right? And now if you raise the price of basic goods because you're tariffing them when they come in, you're basically being charged a tax. You're basically charging people taxes that are no longer, that don't actually pay taxes. So here's an example. You can't get coffee from other parts of America. I think Hawaii has a little bit of coffee production, but everywhere else is where you get coffee from, right? The coffee beans come from overseas. So if you tariff those coffee beans, that means now Starbucks has to raise their price, or the coffee shops have to raise their price, and there you go. That's your invisible tax. So you don't see on your receipt tariff tax. What you see is just a higher price that you're paying for it. So
Right.
essentially, you could have got it for cheaper. But so this is the stupidest thing, because now you're almost taxing poor people. You're taxing people based on consumption. So
well, the pushback is that you will not have to pay income tax, so you have more money to buy the coffee. That's Trump's argument, right?
But those 50% of people don't pay income taxes right now. So, like, how does that even make sense? Like, if you don't pay tax and you have to pay more, that means that you're getting taxed now. It's not called a tax.
Right. Right.
And there's a lot of people. I think if you go like to the tax brackets and you look at like what it is, I think the top 10% of people pay close to 50% of the total taxes, right? So the 90% at the bottom, but below that that 10%, they're the ones that are going to be paying majority of this in the form of tariffs. It's like I said, it's the dumbest thing, because think about it this way: if you're a billionaire, you buy a pillow, right? You pay a tariff. If you're the 999,900 people buying pillows, you're all paying taxes. Now, here's the thing: that billionaire only has to buy one pillow. Those other people all buy one pillow each. That's your taxes. So it's the dumbest thing, dude, to say that tariffs are not taxes. Like, it's all based on consumption, man.
So, okay, what is your general reaction to the market pumping? Bessent said we got deals coming. I mean, is this bullish? Is this still volatile? How are you kind of thinking of where the market's at right now?
It's just uncertainty, man. Like, every headline comes up with something that has a counterpoint to it. Even macroeconomists are like losing their minds right now, trying to figure out what the real intent behind all these tariffs are. Because conventional wisdom is being completely thrown out the door. There was one theory that I heard this weekend that actually seemed somewhat plausible, and that if you think about the tariffs, if it was only 10 or 20% very cheap, people might just say, whatever, it's okay. But if you really want to basically get the consumer to stop spending to control inflation, you put on these huge tariffs, which means that all these people that are buying stuff may actually not buy them.
Right.
I think if ultimately the goal is to basically slow the economy down, get the Fed to basically, cut interest rates, the one way you're going to be able to do it is by slowing the economy. But it's like, that's probably the wrong way of doing things. But I don't know. I mean, I don't know.
We have an executive order right here. Trump's going to be signing an order to require truck drivers to speak English.
That's kind of true. I agree with that. There's a lot of foreign truck drivers that have been kind of coming into the U.S. And I've seen like some videos on Twitter and all this other stuff where basically, foreigners, they come here and they start working in trucking, and then, they have to basically either communicate with people, and they're not able to properly communicate, and it's causing certain issues in the trucking sector. So
okay, so nothing. Go ahead.
The only challenge with that is that there's not a lot of people that are like, hey, I want to become a truck driver. So there was a trucker shortage. I think usually there's these like periods of trucking shortages, and then it kind of dies down, and then it goes up again. So some of that could be just to mitigate that. So
yeah, and Doug's right here that pilots are required to learn how to speak English as well. Okay, can we talk Googs real quick? I mean, why is the market not getting this? What's going on right now?
I think it's pretty much just people looking at ChatGPT and saying that that's the ultimate killer of Google. I'm not going to lie, brother. I have been using the new version of ChatGPT, and my Google usage has gone down. The only thing is ChatGPT lies to me a lot, so I usually have to reference Google too. It still hallucinates. Like here's the thing. Like, I was trying to get it to do some like calculations for me, right? And the numbers just weren't adding up. I was like, what the hell is going on here? Like, is this right? And when I looked at it, like, ChatGPT still hallucinates. There's a lot of places where it really, really excels, especially now that it can actually do like deep research, but it hallucinates a lot,
Right. All right, we got a lot of earnings this week, Kris. A lot of big tech. Google crushed it, but market didn't love it. Meta, Microsoft, Amazon, Apple. In general, what do you think these companies need to say for us to keep up this Zedwig breath thrust that we've seen over the past week.
I mean, the talk of the town is tariffs, right? So you multiples are all compressing at around the same time. Uncertainty makes you compress multiples, and we were already trading at a pretty like high end of the multiple zone. So the thing is, what you really need right now is just companies to not, basically just show optimism in the face of tariffs and be like, we're not impacted by this, or we've got this plan to counteract this thing. But, no CEO is safe from taxes,
Do you agree
tariffs,
with
sorry, not taxes, tariffs. Yeah.
Do you agree with JP Morgan that it's time to turn bullish?
I think so. I think there's a lot of great companies that are on sale right now, considering the growth trajectory ahead of us, especially companies that are going to be getting a huge boost because of AI. I don't know if I mentioned this last time, but like ServiceNow, right? Like my organization now, we have ServiceNow, and we have like an AI agent that basically screens a lot of calls and all this other stuff and references things. And it's actually just, it doesn't replace people. It just makes it easier for people to operate. And so whenever I see like those kinds of things coming in, it's almost like the internet. When the internet first came out, everyone's kind of like, oh, this is great. But the thing is, like, if you look 10 years from that point where they first started to really make inroads, that's when you saw huge value creation end up coming up. Now, there are going to be companies like Palantir that, in my opinion, come out and basically say, like, we're going to be the winners of AI. And I think they're getting a little bit too ahead of themselves, and investors get ahead of themselves and really go deep in buying it without the fundamentals not being there right this minute. So basically what you're doing is you're buying something that's like 5 years ahead, like in terms of like valuation. So if you buy today, you're likely to underperform for the next 5 years, It doesn't mean that you're buying a bad company, because the company makes money. It's, slowly buying back shares. It's growing its overall business, but the multiple that you're paying for it is just at a really high extreme. And there's multiple companies like that in the tech space that are they're getting really high multiples that maybe they kind of need to come down a little bit.
Someone says, why does Kris look like Aladdin but older?
Because I am older. I've got the hair, like, what is it called? Like the part.
Dude,
right now, I usually
like
hold it over. Nah, bro, I'm not a fan.
Well, someone who hasn't watched Aladdin, I can definitely say it's Steve. You really, he hasn't watched any Disney movies ever.
Who,
Lion King. Steve, he hasn't watched Lion King. Nothing.
That's because he was older. That's
no,
because
but
he's
still,
old,
bro. Like, and he refuses to watch it. Like, you could be older and watch the Disney movie. He doesn't want to watch it. So,
yeah, it's all right.
I finally got him on something that he doesn't watch. Tesla. Do you think that this thing is getting out of control, or why do you think it's pumping the way it is? Well, you actually thought it would pump. So
yeah. Well, the thing is with Tesla's running. It's very similar to Palantir. It's similar to other companies. It runs on hopes and dreams of it becoming bigger and bigger. So the fundamentals get disconnected when you have like valuations running on hopes and dreams, right? So it's not at a stage where it's like, okay, they're mature now and everyone is just going to base them based on just valuations. And Tesla tends to have a retail heavy what is that thing called, community, which tends to bid things up, rather swiftly. So the one good thing that, and I think I have to take this into consideration when I am investing, is that when you see like sentiment and people belief in certain things goes like through the roof, then don't look at the numbers, because if you look at the numbers and you harp on the numbers, then you're going to get, you're basically going to miss out on something that could be a huge run up.
You could say that about Palantir too, right?
Yeah, that's what I'm saying. That's exactly what I'm referencing. I mean, it's the same thing with like Rocket Lab right now. Like Rocket Lab's not making money, but if you try to like justify the fundamentals, you won't be able to, But if you look at the value of the thing that they're creating, it's pretty substantial. So when you do your portfolio allocation, it's just, as long as you understand that this part of it is, the dreamer stocks, then keep it in there. I wouldn't put like too much weight into it, but whatever.
SoFi tomorrow. Any thoughts on that?
I don't know, man. I mean, they're executing well on all of their stuff. I think you're going to get a big boost because of the whole student loan refinancing things that's coming up. So that business might end up, doing well. But that's something that they'll probably discuss on the call, and we'll see what happens there.
Yeah. Yeah, I agree. I think SoFi is going to be an interesting one, but this week's going to be a big 180 companies reporting earnings, and we're going to have to see how they perform. Okay, last question for you, Grab. Any thoughts on? You're still in this one, I imagine.
Yeah. No, I'm in it. I think Grab's a great company, man. Like, they're doing well. They're making money. They've got great market share. They're buying back shares. So, just if you look at the valuation forward, you'll see that this company has a potential to do really well. I'm not saying that it's going to like 10x on us. Like, I don't think it's in a business that can get that kind of growth. But, if you have a business that is growing at a like top line 20-30%, and you do that for 10 years plus, you get a pretty good amount of return,
Yeah.
So, and especially if your business is high margin business, so that's where you have to look at two things. You have to look at the margins, and then you have to look at the scalability of that company as well. At what point does the company stop growing as fast as it does, and like what are the reasons for it? And that's when like you have to readjust in terms of valuation and everything else.
So when you see headlines like this, Dallas general business activity -35 versus -16 expected, like do you think that's an issue, or do you kind of think it's just another index that's showing a little bit of a slowdown?
No, I mean, it's a pretty big slowdown. I mean, maybe this is what the Trump administration wanted. Maybe they wanted to slow the economy because they saw that the stock market was overheated, and they wanted to kind of let it come down a little bit, let business optimism slow down a little bit. Otherwise, they could have had multiple years of inflation that ends up getting built into the psyches of people. Maybe that was one of the reasons. Like I said, I'm trying to do my best to justify the actions of this administration, and I can't do it. It's hard for me to do it,
Yeah, I think we're starting to see a lot of people kind of, it was funny when Bessent, he said on the Meet the Press interview that I don't know why people are talking about the Nasdaq's down because it's up 10% in the last. It's like, but it's down because of what you guys talked about for the first couple of months with all this tariff stuff. So it seems like they're trying to take credit for it, which now if we get trade deals, they should take credit for it. But obviously it came down because this whole tariff thing started in the first place.
Yeah, for me right now, I've set up some hedges in my portfolio to take advantage of the mispricing on TLT, like some of the longer term bonds, in my opinion, only because on one hand, you're seeing all this sentiment coming down. So that typically means that, consumer expectations and consumer spend might start to retreat. And if consumer spend starts to retreat, that means that now these businesses are going to have to kind of like, give a weaker guidance. And if they give weaker guidance and inflation is starting to slow down and unemployment starts to rise, it's going to give the Fed enough cover to start cutting rates. And so if the market is disconnected for a myriad of reasons between the bond and the stock market, then you get a chance to basically take advantage of that. So you typically don't see the stock market going up and the bond yields going up at the same time. That, in my opinion, happened. Do you know what VARs are? Like
in the stock market?
Yeah, do you know how that works?
No.
Well, it's not so much in the stock market, but it's how the basis trade works. Maybe I'll explain that another time for you. But basically, it's how it's like insurance on some of the things that the hedge funds were doing, and when we had this huge volatility increase, like huge volatile move up in treasuries, the liquidations that happened and basically got the treasury market to go all the way up is because the VIX spiked so hard from the Trump announcements. And as VIX is starting to come down, you're starting to see those VARs calm down. And I think the Treasury also has some future plans for some supports, whether through swap lines, whether through some regulatory changes. So like this weekend, I know this is going to sound boring as hell, but you know what I did? I spent my weekend listening to confirmation hearings from Michelle Bowman.
Really?
Yeah. I think that's
I
more
think I know
important
why,
than
but
this.
why? Why'd you do it?
Well, that's because she's going to be the not chief regulator, but basically in the Federal Reserve, right? There are people that do enforcement, and she's going to be part of the enforcement mechanism that's going to be there. So Vice Chair Michael Barr resigned, and Trump nominated Mickey Bowman, who's a lot more of a dove when it comes to certain policies that could actually end up benefiting Treasury demand going forward. So I was trying to listen in and trying to figure out, like, okay, like, what does she feel about certain things like SLR ratios? How she wants to basically navigate Basel III endgame requirements that are coming up. I don't know. These, like I said, these are all banking things, but if you dig deep enough, you'll find that there are a lot of supports coming in for the liquidity, for liquidity for treasuries in the coming months and maybe years, especially considering if you look at the rates of inflation around the world, they've come down significantly. And this whole thing with China and Japan and all these other guys selling a bunch of treasuries as a way to get back at the US, like, that's not happening. As far as I can tell, it's not a real thing. So,
Well, what do you think about this chart right here? Container ship count down about 40% year over year from China to the US. Do you think we're going to be struggling in the grocery stores in a couple weeks?
Well, I wouldn't say grocery stores because we don't import fresh fruit from China, so that's not the thing that, like, if you go to like a Kroger right now, you don't see like Chinese made cookies, right?
Yeah.
So it's not that. It's going to be things that are more like goods that are like bicycles, right? Like kids' bikes. You would see that starting to kind of like not be in the store shelves as nearly as much. Maybe toys, right? So you really have to pick and choose. This whole notion that if you go to a grocery store, the grocery store is going to be empty because of China tariffs, like, no, that's not going to happen. Maybe cooking ware, like pots and pans that come from China, maybe that could be impacted. Maybe furniture.
Is that going to force U.S. companies to build bicycles? Like, what do you think happens if that plays out?
I mean, depends on the company and how big they are and how they end up, navigating the sourcing of those products. The challenge here is that I think a lot of people are expecting, like, oh, this is going to mean that all these companies are going to bring back manufacturing to the US. And my thinking is, well, I mean, this is the current administration. You don't know what the next administration is going to do. So if you say, okay, screw it, I'm going to give up all my production in China, bring a factory to America, spend all this money, and then 4 years later, all these tariffs are rolled back. Now your competitors who basically can get cheap shit from China are going to outcompete you because your production line and your supply line is here in the US. Right. So how are you going to navigate that? I think, to me, the biggest blunder here is not utilizing this trade war. And maybe this is something that's happening in the background without us really knowing, but basically get closer to Mexico and get closer to Canada, especially Mexico. Why? Because if you get Mexico to be a much higher developed economy, then one, that opens markets for your goods that are right across the border. So the Mexicans are, large consumers now, right? And at the same time, you don't have all your illegal migration problems, which is something that everyone complains about. Like, oh, all these migrants coming in. Well, guess what? If you want a strong ally in Mexico, you can say, look, you shut the border at your southern end, which is much easier for you to deal with, right? And control your drug dealers, and boom, we'll throw all this like business that we're not doing with the Chinese. We'll move our productions to Mexico, and which is exactly what happened during Trump won and Biden won. A lot of companies started to move their lines over to Mexico. Now the challenge is you're tariffing Mexico too. Like, what the F,
I've had a theory that Trump wants to take down the tariffs based on negotiating, but the more I listen to him, dude, and maybe he's just doing a good job holding a poker face, the more I think he legit wants to keep these tariffs on forever and shift the burden of taxes from one side to the other side. Do you think there's a world in which 4 years from now, the average tariff rate, I think, is at 24%? Do you think that's going to be, I don't know, 15, 18%, basically the same, up from 4%? that we've had for the past decade, basically?
Sadly, it could be. You know, I mean, and not to mention it's a one-time increase. So if it's a one-time increase, I'm sure the market will absorb it, and there's other countries that'll basically pick up the slack. You know, China's not the cheap place to manufacture nearly as much as it was 20 years ago. You know, they're getting better with the real benefit to China when it comes to making stuff there, from what I've read, is that they have a very integrated supply chain, right? So if you want to manufacture, let's say, a certain product, you know, there's going to be things that product, in order to make it, you're going to need to get something from this, something from that, something from this. And all these factories are located within a short distance of each other, and they all have connects with each other. So it's like, okay, I need you to make this remote, you know? So let's say the what is that thing called? The buttons that are like rubber come from this one company that specializes in making rubber buttons. Another one does the circuit board. Another one does the plastic. All of them could be located within a very short distance of each other. And basically that makes it very easy to manufacture the product super cheap, as opposed to one company in Japan is building the circuit board. Another one is building the plastic molding here in the US. Another one is building, you know, the rubber in Mexico, and then it's all just being assembled in a different location. So everything in China, that integrated supply chain, gets cost like super low and super way down, you know, which is something that they have built organically themselves. That's China's real innovation, that they've been able to basically bring down costs like it's been nobody's business. So the thing is, our standard of living has gone up tenfold since all of that stuff, and people forget about that globalization provides for more abundant lifestyles.
Well, that's Trump's argument, though, is that our lifestyles are too good, right? And like, we can't be buying these dollar towels. We should be paying more for them.
I mean, that's the logic that seems very flawed to me. You know, like, do we really want to make towels in America again? Like, really? You know, don't you want to just design a towel, market it, get all the high margin part of the business, let them do the cheap part of the business that has like single digit margins? You know, wouldn't you rather have your focus on, you know, the higher end stuff? I mean, I don't know. Like I said, I'm trying my best to rationalize a lot of the moves that they're making, and it doesn't seem to be very rational. So what can I say?
You got some Chinese companies as well. I just got this picture from Doug offering coupons to deal with the tariffs, right? Like taking off their prices to try to get because of the 145% tariff, they're taking down the prices on the actual goods because they need to increase demand. And you know, with the 145% tariff, it's still going to cost a lot, but it's going to be really wonky, right? You're going to have some companies that discount prices, but other companies that are just not going to be able to have the demand to sell any of their products.
The thing that we need to be more worried about, to be honest with you, is there are a lot of companies that have spent decades developing products, you know, market testing them, doing a whole bunch of things, and they've got a really good business. Now you're asking their supply chains to absorb all of this, and they can't. They don't have the working capital to do it. The business is not as strong. So what's going to end up happening is these Chinese manufacturers could end up just buying that brand. I mean, imagine how hard it is to build a brand, right? And then these guys just come in and freaking say, oh, you know what? We'll take it over. We'll just buy it from you for pennies on the dollar because you're basically insolvent. And then, you know, they start selling into the US, or they start selling around the world, you know? So that's the kind of risk that this administration is taking a little bit, where there's people who've dedicated decades of business building, and it takes a really long time to really make a business, especially a branded business with like quality testing, you know, focus on consumers, figuring out what actually works in the consumer market. And if you end up going this route and they don't survive, their only option is going into bankruptcy, in which case all that IP that they developed ends up going to the hands of the Chinese manufacturers that they've been, you know, basically contracted with.
I think that's the worst part. The worst part is if American companies can't keep up because of the tariffs and they go bankrupt, and then the Chinese companies that, you know, you got the government that can maybe sponsor them, keep them afloat a little bit until things get better. A lot of that business activity could shift by the time the tariffs go down. Also, I don't think the majority of Chinese companies are going to be lowering their prices to deal with the tariffs. You might have some here and there, But if they're lowering their prices to keep up with the tariffs, they're not going to have a margin. They already barely have a margin. So
Yeah.
I am still of the belief, and I think you have this belief as well, that Trump will walk back the tariffs down significantly on China. But, on Friday, he said maybe it's not 145, maybe it's 50%. 50% is still a lot. I thought it would go down to like 20%.
Yeah.
So I don't know.
One of the things that we've also created because of this, and the worst thing you can do is make a mistake and your enemies are able to capitalize on it. So here's an example. Like right now, if we end up doing this tariff thing, this almost forces all these Chinese companies to innovate the shit out of products, right? And if they do the innovation part of it, they become a dominant player in the future. So as an example, you look at Huawei making chips now. Why did they start making chips? Because they were forced to. If you basically put people in a position where they're going to have to compete, and the Chinese are getting better at competition. I know a lot of people are saying, "Oh, the Chinese, they don't innovate. They just basically copy." Do you know a company called Insta360?
Yeah, they make the Instagram camera, right? Or
Not Instagram camera. They make look, go to Google and just type in Insta360. Okay. They started off making products that were similar to like GoPros. Okay. And now they're starting to make all these like other cameras that pretty much, if you're a vlogger, you're using this thing. If you go to YouTube and just type in Insta360, it is the best camera that you can buy when it comes to doing blogging and all this other stuff. And they have so many different things like mounts. They've got, and trust me, this thing is on another level of sophistication. Now, this is something that GoPro dominated, but now this Chinese company's coming in, innovating the crap out of this stuff and winning. A lot of YouTubers are using this to basically do vlogs and all this other stuff.
So your argument is the more we isolate, the more these guys innovate, and it just turns into a less globalized economy at that point.
Yeah. Yeah. Another thing is like, there's a lot of smart people in China, bro. No matter what, like the media says, like, oh, the Chinese are just a bunch of peasants and all those. Like, stop doing that. The worst thing you could do is underestimate an adversary. Treat them like what they are. They are a very intelligent adversary that now you've given them every reason to innovate and basically like come after you internationally when it comes to business. There's still a lot of people that don't trust China. Don't get me wrong. There's a lot of countries that have their misgivings, but dude, if they start making products that are way better than what you can produce and at a price that's cheaper than what you can produce, and your companies have to compete against them, it's a losing battle.
Yeah.
Like, look at Chinese EVs right now around the world. I don't know if you remember this. I think when we first started doing Finance Junkies, I said the worst mistake Tesla made was start making cars in China. You remember me saying that?
Yep.
Okay. Now, do you know why I said that at the time when we were talking about it? I said the reason why is because the Chinese are going to learn everything about the EV market, and then they'll innovate the shit out of it, and they'll undercut you and sell it to the rest of the world.
Yep.
And that's exactly what they're doing right now. Every production.
BYD is growing in popularity in Southeast Asia dramatically. It's not in the States yet, but
yeah, same thing with South America and all across the world. So now, in the short term, Tesla's like, oh yeah, we want to be part of this growth market in China. You've got all these engineers that work at Tesla China. They learned everything there is to know about making EVs. Now they took that expertise, they took it to the next level, and they started building homegrown domestic versions. And now they're exporting them all across the world. See?
Granted, Elon had to go to China because of their manufacturing, and this is the issue, right? Like, he kind of didn't have a choice at the time, but now with the tariffs, it just makes things a lot worse.
Yeah. I mean, it's just, I think the Chinese would have figured it out anyway. It's not like, oh my God, like this was a revolutionary thing that the Americans are building EVs and China will never figure it out. It's just, it would have taken them, in my opinion, much longer to get to the same level where they are today. Like, having a company that does all the innovative parts of it, if you bring them in, they're going to out innovate you. Like, do you know a company called KUKA? KUKA? Have you heard of them before?
The name is familiar, but I don't know what they do.
Okay, go to Google, just type in KUKA robots, right? If you've ever gone to any factory that does heavy industrial manufacturing, you know those giant arms that are moving around and all that stuff, right?
Yeah.
KUKA robots make those. Those are from Germany. Germany, that company got bought by the Chinese, and now the Chinese are utilizing them to like the umpteenth degree. You know?
Wait, China bought these guys?
Yeah.
Huh.
And this was like advanced manufacturing, like really, really like high-tech stuff, you know? So if you look at go to KUKA and just type in China buys KUKA. And this was something that was like, in my opinion, like bad. There you go.
Yeah, 2022.
Yeah.
Yeah. All right. So moral of the story is it's going to keep being volatile. You're still invested in the market, hedged a little bit. And I guess final question for you, the trade deals, like you believe Bessent on they're coming soon, or how are you thinking of the overall deals themselves?
I think they'll trickle in. Even if it's not like a full-blown trade deal, it'll be like memorandum of understanding to future. Like the way that they've been kind of presenting it is that we're agreeing to a framework of a deal. You know, it's like lawyers speak pretty much. It's like it's not a trade deal, but it's the framework to a trade deal. You know, and a lot of countries, they're kind of holding back from making a trade deal because the Trump administration went back on the USMCA, which they negotiated. So it's really hard to deal with someone who's dealing in bad faith. You know, like imagine right now, me and you agree to a certain, arrangement. And then like 3-4 years later, you change it. It's like, come on, man. It's like, I can't trust you to live up to your word. And you're talking about billions upon billions of dollars worth of capital investment, and trade being moved in certain ways based on what, a few words, can't do that. Like right now, some of the stuff that like the Trump administration is saying to the Southeast Asia is like, you need to buy more natural gas from us. Right. And so the Europeans and the Asians are probably like, okay, yeah, we'll buy more. But at the same time, the next administration could come in and basically say that, okay, you know what, we're going to put a freeze on all these LNG terminals. Now, all of a sudden, all the contracts that you have, like your energy security is in question.
Yeah.
Like that's the kind of shit that happens. And that's the part that I think everyone hates around the world, that when you're dealing with the Americans, you're not getting that country that's living up to their word when it comes to dealing with people, especially on things like trade. Which is very important. Yeah.
If they announce a lot of deals, I think the market pumps.
Oh no, I mean, the market sentiment is so bad that I think that we do definitely get some pumping. But once again, then you've got the Trump team just tweeting out something reckless, and then the market tanks again, right? Like this thing, why does he need to go after Canada, like becoming the 51st state? Like, what is up with that? It makes no sense, right?
The Canadians I talk to are not happy with that rhetoric. Let's just say. And who would be happy with that rhetoric? Like, it's ridiculous.
Dude, the Canadians, they spend a lot of money in the States in terms of just tourism and everything else. All of them are staying home. They're like, nah, screw that nonsense. We're not like, as much as like we love America, we're not going to support this administration doing what they're doing. They'd rather go to Europe right now. They'd rather go to the Caribbean, and all that money is tax revenue that's lost, and the average person losing that business, that American company losing business. It's not good.
And I think a lot of us as Americans, we think it's a joke and we think it's kind of funny here and there. And it's like, yes, in some light humor, it might be funny. But I think we have to remember, if you're actually Canadian, if you're in Canada every day, and this guy, even if it's as a joke, is threatening to get rid of your sovereignty, it doesn't feel like a joke, bro. It feels like this guy's a piece of shit. And so obviously, I don't think the United States is going to invade Canada, but I think as Americans, we have to take a step back and be like, how do they feel about this? And they hate it. And that's just not good for sentiment and relationships with both countries.
I think the most disappointing thing that I've seen this year, in my opinion, has definitely been the lack of congressional oversight in controlling Trump and letting him do all the stuff that he's doing right now. Like, where are the balls? Like you were, this is the one time I'll say, like, I'm disappointed in the Republican Party for not standing up to this. There are a few people within the party that have kind of like at least stepped up a little bit to like voice their concerns, but no one's taken any real concrete like stab at this. And if the Republicans get absolutely murked in the midterms, they absolutely deserve it because they're not doing their job in protecting the country. Like, your job is to be that check against the executive branch, not to just be like, oh, my dear leader, he's part of my party, so I have to acquiesce to everything that he says. You know, like, you need to control your dog, basically. You know, and this is where we are with this. So Republicans, a lot of them are just sitting on their hands saying, well, you know, it's just Trump. He's doing his negotiating thing. It's like, yeah, but he's hurting all the people in your constituencies. And what do you think that's going to do for you when it comes to the midterms? You think people are going to be that forgiving? Like, oh, and people will be right to be mad at them for not standing up to Trump, you know?
Granted, in the midst of all this, if we get a good stock market, good economy, we avoid a recession, I think the midterms will be fine. But so it's one of those things where you just kind of have to deal with it. But if it actually works, which again, for all the people that hate Trump and everything he's doing, it's got to not work. Because if the results are delivered, I think most people will not care about the rhetoric. They will care about the results, which is a good economy. But by 2026, will the results be delivered to the point where Americans are like, yep, I'm happy that Trump was the president because look at the economy. You got 2 years.
Yeah, see, that's the thing. A lot of Republicans, especially because maybe we're so new into this, are giving him a little bit of latitude, to deal with this. But at some point, they really need to step up. Like me personally, I've written to my local Congress people here, told them. And what's funny is I think sometimes like the ultra right MAGA people, they'll come out and they'll be like, oh, all these people, they're complaining. They don't understand. And I'm like, bro, you're talking about people's lives, losing jobs, losing their portfolios, and 401ks are going down. That's not like, so the one argument that I keep hearing is some of these town halls that the like a Republican congressman will doing, and people be like, oh, all these people are just, Democrats that are coming to these town halls. It's like, trust me, I know plenty of Republicans, hardcore Newt Gingrich Republicans that are anti-Republican right now. The sentiment has gotten that bad.
Well, I talked to a couple of people in Canada that tend to be on the right wing. Like they agree with Trump's policies, but they just hate a lot of the rhetoric, and obviously they hate the tariff stuff. So you do have those Newt Gingrich Republicans that potentially might start switching on him. It's just a question of if they'd be willing.
If you think about the Republican Party is the party of free trade. Like if you go to everything, like you go to Ronald Reagan, you listen to any of his speeches, they'll be like, wait a second, that's what a Republican is? No. Like, wait, Republicans support free trade? Huh? Wait a second, what? They actually are for immigration, like, huh? Does that actually make sense? Like, no, it's just maybe this is a Nixon kind of like flipping thing that's happening. I don't know.
All right. Well, Kris, thank you. Everyone loves your hair, by the way. So we might have to.
By the way, I hope people realize, especially in the chat, this is not Kris being on the Trump train, not being on the Trump train. If your policies make good sense, I'll support them. If they're terrible policies, I will be anti them. Like, I think one of the great things that Trump is doing is controlling fentanyl. Like, I've worked at hospitals and I've seen kids in their 20s die of fentanyl overdoses. You think that I'm like, oh yeah, we don't have to worry about fentanyl. I'm like, no, I think Joe Biden and his team, especially like the DHS secretary, that dude should have been fucking brought up on charges because he allowed so much criminal behavior and drugs to get smuggled across the border on top of human smuggling that was happening. And this guy would constantly say like, oh, there's no problem at the border. That guy is a fuck up. And I'll tell you right now, I 100% would be against that guy. The fact that Joe Biden didn't control them and the Democrats didn't control, it should be a huge stain on the Democrats. So when you have someone who's making good policy, bro, I'll agree with you. If you're making shitty policy, I'm not afraid to be like, yo, this is a stupid move. So that's it.
You're not dogmatic. You're not stuck in ideology. That's
not at all. I think that's the part that I hope people eventually like get a little bit more in tune with it. And I think majority of the country is like that anyway. It's just that they're very silent, and the moderate majority just tends to kind of just like, whatever, it's okay. Until it really starts impacting them, they're not as vocal. But then when it starts to impact them, like they get into like, okay, we need to change things mode. So
right.
Yeah.
Christopher Patel, thank you so much. We'll talk to you later this week. We had a big week for earnings, and
later.
Talk to you later.
Highly recommend you look at some of the banking regulations that are being proposed with regards to how they hold treasuries, how those impact their Capital One ratios. I think a lot of the viewers here would benefit significantly from learning about that. The reason why is because if you want to figure out how the pipelines of like the financial markets work, especially in the bond side, you need to know how the regulatory environment changes could end up impacting demand for things like treasuries. And if you have insight into that, and believe it or not, you can actually piece it together, you can actually do some real damage and make some really good money, even when the markets, like stock markets, are going down. So, yep.
All right,
Later,
Chris.
brother.
Later. Have a good one. All right, cool. I think that's pretty much it in terms of markets. We don't have any headlines going on right now. It's actually kind of quiet. Bessent already talked. Trump already tweeted. I mean, maybe towards the middle of the day we'll get something. The press secretary did have a briefing at 8:30, but that was on immigration, so that had nothing to do with the broader market. Snapchat having a nice day, up 4%, so that one holding some momentum. Again, I think a swing to 12 on a good earnings is pretty likely. So I'm in for 1,000 shares at 870. I think there's a shot. I think it would really have to be a horrible earnings for Snapchat to go back down to 7 or 6. I mean, like, and they've had some crappy earnings before, and they haven't gotten there in over 3 years. So I think this one, I think it should do well, but we'll see how strong the earnings are on Tuesday and if it can live up to some more momentum. Amazon's red. All the Max 7s are red. Nvidia's red. Grab is down about 2%. Palantir down 1%. So that big burst of green we had in the morning kind of being taken away. It's not, going down dramatically. S&P 500 is flat on the day, up 0.02% after going up almost 1%. Robinhood 51 to 49.60. So seems like not a lot of moves until we get the next set of headlines, which I think Trump's speaking again later today at about 4 p.m. or 4:30. So based on what he says there, we'll see if that ends up changing any part of the markets. Amit, are you buying more Goog? Yeah, probably. I mean, where's Google right now? 160. Yeah, I mean, I'll buy more when it gets back to my average. I bought it at 158. Let's see if it gets back to 158 or a little bit below, and then I'll probably buy another 100 shares. But if you want more updates on Google, if you go to Steve and I's podcast from last night, we did about 30 minutes on this one. He went through the numbers, comparing it to a lot of other companies, including Costco. It's a bit ridiculous, bro. It's a bit ridiculous. So seems like Google should not be the craziest buy here. All right, cool. So that's it for the market open. I'll talk a little bit about the Toronto meetup. So if you want to leave right now, that is the end of the show. We'll be back at 3:45 for the market close. In terms of the Toronto meetup, it was really awesome. It was really, really cool. I just want to give a big thank you to everyone who showed up. If you're in the chat, let me know, and you can put your name right here in the chat and let me know if you were there. But it was just really cool, dude. I met Silly Bunt for the first time. Silly Bunt is a guy who's been watching me since 2022. Got into Palantir, and I always thought his name was Silly Blunt. He's a tall guy, so he comes into the room and he's like, "Hello, I'm Silly Bunt," and I was like, "You're Silly Bunt!" Like it's just so funny to like actually see people in real life from the chat. And so it was super cool, dude. It was just super cool to meet a lot of you guys and see what you think about the show and get your perspectives on everything. A lot of people apparently in Toronto bought Palantir early. I mean, I would say at least 50% of you guys were early Palantir. And so it's a pretty big chunk out of all the people that were there. And some of you guys went really heavy at 7 or 8, sold your house, bought more Palantir. And so it was just exciting to see. We had people literally bring a Palantir flag. You can see in the background, 4 guys bought that Palantir flag. And it was so cool to just get to talk to them about their conviction, their faith in the company and all that stuff. Tanner was there as well. It was awesome. You can see Tanner right there on the left-hand side of the screen, left-hand side of the picture. he was late, but he was there, and it was awesome. And he got to talk to a lot of people and share opinions and perspectives. We had someone show up who was 84 years old, who just started investing 3 years ago. One of his first stocks was Palantir. I mean, it was just incredible, dude. It was like the diversity of people that showed up to the meetup is always one of the coolest things about it. We had some kids who were like 20 and in college, and they were, just getting started with investing. Then you had some people who've been investing for years. You had some people who worked in private banks, and they get their coverage from YouTube instead of like the sell side reports, because they get more value just from like a show like this and getting to crowdsource all this information. So it was just one of those things where it was a really, really fun event. And every time that we do this, I'm super grateful for it, because you get the opportunity to meet all these different people from different walks of life. This is what the venue looked like a little bit. Shout out to Craig. Craig, if you're watching, brother, this guy absolutely hooked it up. He got us an entire basement in his apartment complex, and it was able to hold like 200-300 people. And at one point we had about, I think, 100 people at once, and then 170 throughout the 5 hours. So we had pizza and drinks, and like everyone was able to just network and talk with each other. And I don't know, dude, it was super, super cool. And it was, and as I was talking about last night, it was humbling. It was very, very humbling. Again, when people come up to you and they say that, they say that they're spending their entire day with you, and that they really appreciate everything you do. And I don't know, Mary Giavelli is in the chat. She was there. This woman has she's been buying Palantir since 2023, and she loves Arnie and I. And it was so nice to finally meet her in the person. I was just like, "Hi, how are you? What's your name?" She was like, "I know you, and you know me." I was like, "No, what's your name?" And she was like, "My name is Mary." I was like, "Mary Giovelli." I'm probably saying her last name wrong, but she's also Italian, and she loves Arnie. So there you go. And that's Lynn on the left-hand side. So just meeting some of these people that for years have been keeping up with the content. It was just so special, dude. It was so special. And I think this is the entire reason that I started the meetups. The idea for the meetups I had in December, the concept was, hey, there's all these people tuning into the live streams. Wouldn't it be cool to just meet them in person, right? Because it's always a weird relationship of just me here, everyone watching. And it's like, it would be nice to just make these connections happen in person and get to speak to people. And that was the idea behind the meetups. And the New York meetup went really well. California meetup went really well. And then Toronto went well. So I think we do this every month for the next couple of years, dude. I mean, like, I have to block off one weekend every month of some intense traveling, but I think it's worth it. And the reason it's worth it is because you get to actually hear from people and why they care about you as a creator. It's like, it's one of those things, dude. And I hope I express it as often as I think I need to express it. But the gratitude that I have for this community is beyond my wildest imaginations in terms of how much I am grateful for the fact that I have this community, and that you guys use me as a vehicle to get your content in the morning, and it turns into a relationship where all of us are making money together or losing money together over the past couple of weeks, but we're all doing it together. And I think it's very rare in life to build a community. And I've said this a lot about Palantir. Palantir has really given the framework and foundation to be able to build the community that we have today. And then that evolved into the market open and talking about all these other things. But it was realistically Palantir all those years ago where everyone came together and said, hey, we're going to bond over this one idea. We don't even really know what this idea does, but we're just going to bond over this idea, and we're going to make it something that we turn into a community over. And then obviously what's happened with the stock and the company has been transformational. A lot of people's lives have been changed because of it. But in the midst of that, all these new people came into the community, and it turned into just general stock marketing and investing over just Palantir. And I think that's really special because, if you support the New York Knicks and they win a game, that's awesome. But if you support Robinhood and they go up 10%, everyone makes money. It's a different level of intimacy when everyone is winning or losing together at the same time, and everyone's crowdsourcing all this due diligence every single day to try to get the results that we're trying to get. And as I say that, we're dumping right now. So S&P 500 down about 0.2%. There you go. Now we all get to lose money together after making money last week. I don't see any headlines. If I see any headlines, I'll let you guys know, but seems like it's probably just algos taking a little bit of a dump right here. So yeah, I mean, look, it was It was really special. It was really important. I can't wait to do the Houston one coming up. I love Toronto. It's a beautiful city. I love the lingo that you guys speak in Toronto as well. The Ute and Ting and Badman is like all this. Crody. You know, I love these. I got to hang out with some really cool people in Toronto and go to a bunch of different people in different locations and kind of see where they live. And I had a friend who had an apartment on a high rise and it was near the CN Tower. It was just like really cool stuff to see these people. And I met a lot of people that are in different industries and crypto and stocks that have done well for themselves. And it's all in Toronto. There's a big crypto stock market investing scene in Toronto, and all these people kind of built their wealth from there. And so getting to see all those people, getting to talk to all those people, getting to network with them, I think was really cool. And then at the meetup, everyone got to network with each other. Again, the way these meetups work, if you guys ever come to a meetup, it's literally a bunch of people in one room and everyone's in different corners talking and meeting and doing other people. And then I'm running around trying to talk to everybody. And that's what it is. So you get to just learn about all these different cultures and people and backgrounds and network. And a lot of people exchange phone numbers. And I think that's what makes it so fun as well. Mateo says, we get it, bro. You're a Drake fan. Dude, the amount of Drake I listened to over the weekend. By the way, when they played Drake in the clubs in Toronto, we went to a nightclub called Century. And Drake in Toronto hits different. Drake in Toronto hits different because it's Drake's city. So when they put on Drake at the club, everyone goes crazy. And I'm a Drake fan. And so I enjoyed listening to Drake the entire weekend. And so it was fun. It was really, really fun. Shout out to Mary. There she is. She's in the chat. Mary, I was just talking about you. It was great to see you. She gave me a big kiss on the cheek as soon as she saw me. It's been a long time since we were supposed to meet, and we finally got to. Actually, I have a video of Mary. I had to send this to Arnie. I haven't sent it yet. But here's you guys will be able to hear it. Here's Mary talking about how much she loves Arnaldo right here. Is this the video? Let me see. Yeah, here it is. All right, you guys go. She's the most adorable human ever. Here we go.
Hi there. Arnie, it's Mary Giovanelli. She's Italian. I'm Italian. She loves you. I want to meet you. We have to meet. All right. Arnie, I've got a fan for you.
It was just so cool, dude. It was just so cool meeting all these people. This guy brought his kid. And just adorable little baby, right? And like, it was special, dude. It was really, really special. And I think the biggest thing about it is it was very welcoming. I mean, anyone could come through no matter who you were, where you come from. If you're a beginner investor, I mean, there's one guy started investing a month ago, but he found me on Twitter and he's in Toronto. So he showed up and he got other people that have been following me for years, right? So it was just really nice to see everyone and get to talk to everybody as well. So yeah, Houston meetup, that'll be the next one. I think it'll happen at the end of May. I don't have any dates on it yet, but I will get the updates. So for those that are asking about it, trust me, I will give all the details when it happens. So once it is ready to go, I will put everything out there. I think the thesis for the meetups now should be private spaces, because California and New York were like bars. And I got lucky on those meetups where we didn't have any interruptions, but this one was so nice because we had our own space. So one thing I will say is if you're in Houston, like hit me up. And if you can work with me, I'm willing to pay for it. It doesn't have to be free or anything, but if you can work with me to get a location that could hold 100 people, if you know a guy or you know a buddy who has a bar or something, and for like $500, they'll give us the night or something, like anything, I would be willing to network with you and try to find something out, because I think that's what makes them more successful, if everyone just has their own privacy in the event itself. London meetup, I think in the UK, or I think, yeah, obviously in the UK. I think in June it's happening. Still got to figure that out. So I'll give you guys updates on the way, but Houston's definitely happening. It is also ironically Drake's favorite city. So you guys can see the pattern right here. No, but in general, there's a lot of you guys in Houston, which is why I'm saying Houston's next. A lot of people said, why did I pick Toronto? The reason I picked Toronto is because you guys kept saying in the chat, go to Toronto. It wasn't like there was any logic behind it. And a lot of you guys showed up for Toronto. So I just want to go to places where people are there. And from my understanding, I believe a lot of people are in Houston. Once I put out the Google form, we'll see how many people can make it. I think, I'll put out the Google form soon just to gauge interest, even if we don't have a location or time yet. So I'll put that out probably this week, and then anyone who's in Houston can sign up. And we can get the fourth meetup of the year done. But it was, again, dude, it's hard to put into words. It's just really, really, really special. Like when you get to talk to 170 people individually and they tell you why they care about your content, why they keep up with you as a creative. You guys have probably heard comedians and musicians talk about this, but it's one of those things where your boss is the audience in some respects, right? Like your ability to continuously progress is based on the audience. So the audience growing and the audience connecting with you. And that doesn't mean they have to agree with everything you say, but the audience actually wanting to get value from what you speak about and choose you over all the other forms of competition that there are for content. It's just really special. It's really, really, really special. And I can't express the gratitude. Like there was multiple people that brought their wives and girlfriends over. And so the number one question I ask when couples come over is like, hey, as the wifey, I'm in the background. Are you annoyed? Is he forcing you to listen? Yada, yada. And the ones I talked to in Toronto, they were like, no, now we started listening. And like, your stupid little jokes, we actually laughed at. Like one of them said that to me. It was great. It was great to hear that. But like the fact that it becomes incorporated in the routine and the husbands are forcing the wives to pay attention to it. And the wives are actually, getting a little bit of value, which is nice. I don't know, dude. It's just really cool. It's really cool because you're entering people's lives, right? You're entering their daily lives, their homes, their kitchens, their offices. And I take that very seriously. And I want to make sure that when I enter into your lives every day, there's a level of focus, a level of commitment, a level of data, a level of analysis, a level of diversification of viewpoints, and obviously a level of entertainment and humor, which is a given, but just want to make sure that's there every day. That lives up to the excitement. So yeah, it was awesome. I see a lot of locations in the chat. We will definitely do these locations over the coming years, dude. Like Singapore, probably 2026. New York, we're going to be doing again in the fall. New Jersey as well. We'll probably do New Jersey one because I'm local here. Boston, we definitely got to do. DC, we got to do. It's going to happen, but it's probably going to be once a month. And over the coming years, we'll try to get as many as we can as well. Is NVIDIA crashing as I'm speaking? S&P is down 549. NVIDIA's down 3.5%. NVIDIA is basically giving back all the gains they got on Friday. So, I mean, it's not that surprising. Palantir is down 2%. All right, everything's going down. Robinhood, 48. There's no headlines. For those asking about the headlines, I don't see any. That would be the reason for it. Outside of just, we pumped a lot in the morning and we maybe didn't deserve that much of a pump. And so people are selling into it. Yeah, the only update we have is the EU chief says at this point, no indications that the Spain blackout is a cyber attack. And then we have the Dallas Fed Texas Manufacturing Index, which was a nasty -35 versus -16, but nothing like at this moment that's causing some of this red. Amit, how many mocktails did you have? Okay, so I didn't drink at the meetup, but I drank dude, the night before the meetup was ridiculous. Okay, so we went out. I drank a lot more than I've drank in a while. Like at least 8 shots, a couple of drinks. Like it was a lot of drinking. And so we got out of the club at like 3:30. And then the guy whose house I was staying at, he had a genius idea. He said, Amit, let's drive to Niagara Falls. And I was like, okay. And so we drive 2 hours in a Cybertruck on 30% battery. I don't even know. I was knocked out in the back. I don't even know how he got there on the battery. And we go to Niagara Falls and we get to see the Niagara Falls, the water, all that stuff. That's nice. And then he's like, all right, let's get Denny's. I'm like, okay, I could barely even function, dude. I was like, okay, I guess we're getting Denny's. And so then we had Denny's and then we drive 2 hours back. And so I get home at 7 a.m., 7:30 actually. And the meetup is happening at freaking 2 o'clock. So I get home at 7. I fall asleep. I wake up at 11:30. So call it about 3.5 hours of sleep. And then I'm like, all right, I got to get ready for this meetup. So, yeah, I don't know how I even functioned throughout the meetup, to be honest, because like I was running off 0 sleep. I wasn't really hungover though, because on the drive over to Niagara Falls, that kind of died out. But what got me excited at the meetup, and a lot of you guys kept asking about this question. One of the number one questions I got was, how do you have so much energy in the mornings? How do you have so much energy? And then during the meetup itself, people could see I was really energetic because I was like running around to all these different people. So everyone kept asking, how do you get all this energy? And the answer, even after 4 hours of sleep, which has happened many times, like on the market open, right? Like I sleep late and you know, try to keep the energy of the market open. I am so grateful that people show up, right? I'm so grateful that people show up. So whether it's at a physical meetup or it's on the YouTube live, the fact that people show up and take time out of their day to spend, whether you have 1 hour of sleep, 4 hours of sleep, 30 minutes of sleep, the energy usually is there because I'm just so grateful that people actually come to the meetups and come to the YouTube streams and enjoy the content. So we're going to keep doing the meetups. It's going to keep being fun. Hopefully it's exciting. I want to keep exploring a lot of different cities and love Toronto. I want to go back and visit Toronto and spend a week there. And yeah, we'll be doing more meetups throughout the entire year and probably over the next years. Also, yeah, I'm 27. Maybe at 35, if we're doing the meetups, we can't really get through that. But at least at this age, I'm able to have a little bit of sleep. Tanner says he's very extroverted. Yes, the extroversion is also there. One guy, Eric and his wife came through. The wife is super extroverted. Shout out to Marty if you're watching this right now, and Eric is super introverted. And so Eric, even though he's an introvert, his wife pushed him to come to the meetup because she knows how much he loves this community, and he was talking to a lot of people. So it was really cool just to see people get out of their comfort zones to actually speak and talk and network. You know, someone who really doesn't go to these types of events, and it was because his wife pushed him, and his wife doesn't even really keep up with the content. She just wanted him to be ingratiated into the community. So it was just really, really nice to see the types of dynamics and people actually being there and wanting to make a conscious attempt to be there as well. As I say that, markets are tanking. Tesla down 3%, S&P down almost half, Grab's down 2%, Google's down 1.17, maybe it gets back to 158 where I bought it at last week. Hoodie, 48.45. And then where is Palantir? Tesla now going red on the day. Palantir is down almost 3%, 109 on Palantir. Again, I still don't have a headline for explaining this, but I also don't think we need a headline, dude. We pumped a lot last week, like a lot. We pumped a chunk this morning, almost 3-4% across the board on a lot of these growth stocks. Like if we're giving back some of that, yeah, there's just people selling and taking profits. So I don't really think we need a headline. I'm not seeing any sources of news to explain these red candles rather than algos and people selling to take profits. That's what it feels like here. Now, if the S&P gets down to 1%, 1.2%, then something's going on. But if we're only down 0.5% after the week we had last week, I think that's not too crazy. Yeah, shout out to Mary. She actually had a dinner with Marty and Eric. So Mary and her husband, Alan, had dinner with Marty and Eric. And two couples, Mary and Alan, a bit older, Marty and Eric, I think in their late 20s, you know, they went and had dinner because they met at the meetup after the meetup and they went to a restaurant. So it's just stuff like that is so cool. Stuff like that is so, so cool. Tanner says literally everyone was so nice and respectful. Not one person gave off bad vibes. What a good time. Yeah. And I think we've been pretty lucky the past 3 meetups. You know, when a lot of people get together, what tends to happen is if there's very diverse viewpoints, people start arguing and all that, you know, like, you never know. You get a bunch of people together and people disagree on something. They might get into like some harsh arguments and you just never want things to get physical or confrontational or anything. So I take a risk every time with these meetups, and I just hope that everyone is normal. And if there are disagreements, people will handle it respectfully, and that the majority of people just want to interact with other people. And so far, we're 3 for 3. I mean, that's what everyone has wanted to do. And I think it's because everyone knows that these types of communities are very rare to find, especially in the investing space. So people don't want to mess up that opportunity to actually network and get friends and become friends with people, right? Get people's numbers, get their social medias, and actually connect with them in real life. I was there for 3 days. I was there on Thursday night, and I came back on Sunday morning. So it was a fun time, dude. It was a fun time. Now, granted, one of the reasons it was also fun is because I stayed with a friend. And remember, I told you guys that guy who has the penthouse. Yeah, that guy is. I said I thought he was rich. He's a little bit more than rich. I mean, we're talking about $50,000 a month for rent. Like, so the apartment was really nice. And let's just say it was a little bit better than whatever Airbnb I would have paid a couple $100s for. And well, the guy, he spends money, you know, you're buying $10,000 worth of alcohol at a club. I mean, it's like it was one of those experiences where I would have never experienced it by myself. Like literally one of the nightclubs we went to, there was a line around the corner. Yeah, Tanner was at his house, so Tanner knows how rich he is. And a group of 7 of us walk up to the front of the line, and the dude just taps one of the bouncers. Line opens up, and then we go into the club. And we have a table reserved for us in a crowded club as soon as we get there. And then I found out the other night I was talking to him. He was like, oh, yeah, I just texted the owner, and he cleared it up 20 minutes before we came. I was like, all right. So this guy is very well connected in the city. You guys wouldn't even believe his age. Tanner didn't believe his age. He's not, dude, he's 22. He's not some 50-year-old guy. He's a young guy doing very well for himself. Parents are well connected in the city as well. And so every restaurant or club that we wanted to get into, I mean, we just got into it. So I don't expect that type of experience at every, city I visit, but that one was different. I didn't expect that. I didn't expect that shit, bro. I didn't expect that. But then I have to ask myself, why is he doing this, right? Well, why does he want to network and party with me, and he's allowing me to just like stay in his house? And I think it's because we developed a good relationship over the past couple of years on Twitter, and we have a mutual respect for each other. And as a result of that, he's, it was just a regular weekend with him hosting someone at his house. So from that perspective, I think the other cool thing about these meetups is that when you meet like-minded people, and he's a big investor. So we talked about investing. I mean, last night we were up talking about Bath and Body Works, which is a big stock that he's into. I have not bought it yet, but he definitely gave me a hell of a pitch at 5 a.m. for like 2 hours. Wow, it's up 3. Of course, it's up 3% today. But we got to connect over investing, even though he likes to party as well. And so I think the more and more people that we're all able to connect with in this entire community, the more different experiences that we can have as a result of this. And it's kind of one of those things where it's almost full circle. So for example, when I was at California and I did the figure interview, I took one of you guys from the chat who hit me up and said, hey, do you need a ride to get to figure? And then I had another friend in Berkeley who's also like a fan of the content. And I brought him because I know he really wants to see the robot factory. So now I'm just thinking of this right now. I took 2 people from the chat, people that are part of the community, to go see the factory, which was like a once in a lifetime experience, right? Getting to see these robots, because you have to get invited there and you can't just get in. And like the reason I was getting in was because I was doing an interview. And I think just like, hey, let's do some good and put it out into the world. Sometimes that gets rewarded to you. And so now when I need to get a place in Toronto, you have someone who reaches out and shows you a good time and is able to host you. I think like that is the vibe of this entire community. It's like we just lift up each other, help each other, do whatever we can, and try to give everybody different experiences. So I think that's what we're going to keep doing. And hopefully as we keep doing that, everyone gets to experience more about it. What was the Bath and Body Works pitch? It's trading at 8 times earnings. They're profitable. They're doing $3.40 a share. Their gross margins are 43%, and the tariffs aren't going to affect them. So he thinks fair value is like $50. He thinks it's just trade at close to 14 times earnings. Which, look, I mean, it's not a crazy idea. He posted a video right here. Let me show you guys this video. I got to turn the music off on this video because of the freaking the YouTube ads. But I was at his place at 5 a.m. I had to be up to go to the airport, and he had me trying all these freaking Bath and Body Works products. Look, it smells really good. The vanilla chai candles were incredible. Will I actually buy the stock? I don't know. He's also big into Snapchat. Snapchat, I get. I understand. Like 850, I think the downside's limited. I think the downside on Snapchat's really limited. But Bath and Body Works, I don't know. But a lot of you guys have reached out even after this video was posted, saying that, your moms or your girlfriends or whatever love that store. And I went to Bath and Body Works a couple of years ago, so I remember this place. It's just a question of, is the stock necessarily undervalued? Nvidia recovering a little bit. It was at 107, now it's at 109, so getting a little bit of juice here right now. Tariffs on baby oil, yeah, that might happen as well. But anyway, the point is the fact that we were up at 5 a.m. talking about investing, And then the night before we were partying. It speaks to the diversity of this community and all the different people that are in it and all the different experiences we can have. I mean, I think that's also like over the next 5 years, if we do a meetup every month, that's 60 different locations, because 5 times 12 is 60. That's good math right there. And you know, that's one way to travel the world and meet everybody. Why are you guys saying 106? NVIDIA, you guys see on the screen? Oh, I'm on Palantir. Oh crap, my bad. I was on Palantir. See, they're getting so similar in price. NVIDIA's at 106. Never mind. NVIDIA's shitting the bed. Yeah, it's not doing the best. But over the next 5 years, we do these meetups. Like, it's a way to travel the world and see everybody. And for everybody to connect, you know? So I think that is the goal with these meetups throughout the rest of the year. We're definitely doing LA for those that are asking. LA will happen probably in September, I think. Vegas as well. So yeah, we're going to try to get to some of those major cities throughout the coming months. And it's a write-off. I mean, look, that's another thing, dude. Like, all of this stuff is a business expense, right? At the end of the day, meetups are not literally business, but they're part of the business of this, right? Getting to meet everyone who's engaging with the stream. So it is a way for me to efficiently travel the world and get to meet everybody. So Google 159 down 1.3. I bought it at 158. This freaking thing is going to look like it's getting right back there. Where's the S&P? All right, S&P is down more than 0.5% now. It's not 1% yet. Again, I don't have a headline for you guys to explain this at all. Even the sources I'm looking at, their headline is NASDAQ down 1%. That is their headline, because I don't think they have a reason for why the NASDAQ's down 1%. But yeah, we are starting to go a bit more red. Do you like Toronto more or Montreal? I like Toronto. Now, granted, I went to Montreal for like 2 days a couple years ago, but dude, I love Toronto. I love T-Dot. Also, I mean, this is a known fact what I'm about to say. I think everyone's heard this before, but the most beautiful women in the world are in Toronto. I mean, it was just gorgeous, bro. Like walking down the street, you're like, my goodness, bro. Like the women in Toronto are absolutely gorgeous. Like it's different. And there's gorgeous women across the world, but Toronto was different. So it was nice to see. And I definitely want to go back for a week by myself and spend some time there. But it was definitely pretty fun. Montreal women are better. Well, just in general, dude, like that area. Yeah, everyone in Canada said it's in the water for some reason. Maybe. But yeah. When you compare it to Jersey Shore, it's a little bit different. It was nice, dude. It was very, very nice. And the city's beautiful, bro. The freaking CN Tower. Like it was one of those things where it's like in New York, when I look at the skyline, I see ambition. And in Toronto, when I look at the skyline, I don't see the same type of ambition in New York, but I see like a bustling city with a melting pot of ideas and a lot of people that want to work and interact and build different things. I got to see the Shopify. I didn't go into the office, but I got to see Shopify headquarters, Google, all this stuff, and just see all the tech companies there. And it was just really cool. It was like a smaller version of New York. It's not as inspiring as New York. New York skyline is still a different level of inspiration, but that CN Tower with all those buildings, it was just a chill vibe on their skyline, and you could understand why people like living there, and like having businesses there, and continue to spend time in the city over some of the other. The other difference right here is Toronto's a very chill vibe. New York is very hustle every single second, right? In New York, it's like if you're not grinding, you're dying. In Toronto, it's like there's a grind culture, but the culture is mixed with the niceness of people. I mean, I said this yesterday on the Future Show, but I walked into an elevator and someone said hi to me. That has never happened, ever. Like ever. I mean, I'm sure it's happened before in life, but in freaking New Jersey, no one says hi when you walk into an elevator in like a building. And people said, so I'm also attracted to how nice people are. People are just really, really nice. And I don't know, dude, I could literally see myself like staying there for a bit. I don't know. Maybe I'm too starstruck by the city, but I definitely want to go back again and visit, and hopefully it's same vibe in a lot of the other cities as well. So Amit has Toronto fever, 100%. I have Toronto fever. Gotta make it to Chicago. Yes, we're gonna do Chicago. We gotta do London as well. Hopefully in June. I gotta plan all these out, but definitely Houston in May. And once we get done with that, we'll get to the next one. Jasmine says we low-key don't even make eye contact. No, exactly. Jasmine is 1000% correct, dude. In Jersey, you don't make eye contact. You just say, you give the vibe of keep it pushing, buddy. You don't have to say anything. Same thing in New York. So in Toronto, people are saying thank you and holding the door for you and shit. I'm like, wow, that is like, it's different, bro. Like if I go to my local Quick Check in New Jersey, which is like it's like a convenience store, I guess. They make sandwiches and stuff. Like, you're just walking through the store, the vibes are just like what you're looking at, right? We're in Toronto, we went to a grocery store and it felt welcoming. It's different. It's hard to explain it. It's just so hard to explain it. But it was nice. It was a fun time, and we're going to do a lot more of these meetups. You're lucky if you don't get punched in NYC minding your business. Exactly. My drill team had to take a dance class in New York, and the lady yelled at us for calling her ma'am. We had to answer yes, ma'am, for everything. See, I don't think that's happening in Toronto. New York is just different. Miami's going to happen as well. So we'll do Miami. By the way, you guys want to hear something funny? So remember that guy that I told you messaged me? Some of you guys might have missed the story, but there's this guy who messaged me who bought Palantir at 30, and he's in Miami, and he messaged me. Not going to say his name, but he's up there. And Steve didn't even believe that he messaged me. Steve could not believe that it happened. He messaged me again last week. And I said, I said when I tweeted watching World War II documentaries, he messages me and he's like, "What documentaries are you watching?" I really couldn't believe he cared about what documentaries I'm watching. Apparently, there's another hint for everyone who's trying to figure it out. He's written a book before. And so I started talking about the documentaries, and he sent me a personal copy of his book to read over the weekend. and I wasn't home, so my mom got the book, and she's like, "Did he actually send you a freaking book?" She's like, "Why is he sending you this?" I was like, "I don't know," but I guess he wants to keep developing the relationship in terms of whatever it is. So the reason I bring this up is because when I go to Miami, I really want to see him and have dinner with him. I think it would be pretty cool. Again, he's pretty up there in terms of wealth. So I don't know how much Palantir he bought at 30, but he probably bought a lot of it. And so he's probably grateful that he found Palantir through my content. But it's one of those guys that's like, all right, this would be pretty cool to meet someone like that. It's not Mr. Wonderful. It's not Kevin O'Leary. Has Kevin O'Leary even written a book? Would anyone want to read Kevin O'Leary's book? I actually want to read the book he sent me. Like, I don't read a lot. I read a lot of articles, but I don't read books. But I would love to actually read his book because now I'm interested in World War II. And so, yeah, I think we got to do Miami. We got to do Miami because there's so many people there. Derek's obviously in Miami. Now, he's getting really busy with his startup. Things are going well for him. So we're going to have to see if the schedules line up. But a lot of you guys are in Miami. There's a lot of important people in Miami that it would be awesome to meet. Maybe even do a podcast with some of these people. So I think we got to do Miami. It is not Trump. Trump is not DMing me on Twitter. Trump is tweeting a lot of things out to the world, but he's not DMing me. It's also not, why are you guys saying it's Carp? Why? It's not. First of all, Carp's not in Miami. If anything, Carp's in freaking Colorado or DC or wherever he's. Carp is traveling most of the time because the EU president, Louis Mosley, who I did the podcast with, he's traveling 60% of the week. And his headquarters is in London. I can't imagine how much Carp is traveling because the business is international. And so I doubt Carp is really stuck in one location most of the time. It is not Fresh and Fit. I would not really care about doing a podcast with Fresh and Fit. Those guys are, I don't know, bro. Those guys, the whole Andrew Tate Alpha thing, it's like, it was cool for like 20 minutes a couple years ago. Now it's just like, I think that content's getting played out. So yeah, I would not care too much about collaborating with them. Aaliyah says, sorry, we miss you in Toronto. Next time for sure. We'll be in NYC this weekend. I love it. We'll definitely do New York City again, probably towards the end of the fall. And so we'll definitely make sure to do New York one more time. Also, Brett, my guy Brett in the chat, he's in Miami as well. So we got to do Miami for everybody. It would be pretty fun. Okay, cool. I think that's it. We are done. I'll be back at 3:45 again. Thank you everybody for joining. Very, very, very humbled from the warm reception in Toronto. Here's the biggest thing I didn't even show you guys. I am going to get a lot of respect from you guys because take a look at this. Medium steak, baby. Medium freaking steak. I don't care what anyone says. It's not medium well. Steve said it was medium well. I think Steve's wrong about this. Look at all that freaking pink. You're telling me that's medium well? Get the hell out of here. Tell me that's medium well. That is medium steak. And I loved it. We went to Animal Steakhouse in Toronto. They opened up like 4 months ago. Amazing steakhouse. Medium. We're doing medium now. I think I'm a medium guy. I'm a medium guy with Chicago style crust, which I learned for the first time. It's when they like really make it crispy on the top. So for all you guys saying medium well, it's not medium well, dude. There was a lot of pink in that. And so I think I'm a medium guy now instead of medium well. The funny thing is all of you guys are saying it's medium well, which it might be, which means I'm actually just a medium well guy, but I'm never going to be a medium rare guy. That's just not happening. It's just not happening. We're not doing medium rare. We're not doing medium rare. When we go to Houston, we're going to have to definitely hit up a steakhouse and maybe we'll compare between medium rare and not, but yeah, anyway, super grateful, super humbled. Cannot say thank you enough to the amount of people that came to the meetup. And the other thing is like, even the guy, Craig, who set up the meetup for me and set up the entire location, he didn't expect the turnout, right? Like after an hour, he comes up to me, he's like, dude, what are all these people? And I'm like, yeah, people showed up. And he was just like, I didn't think you were actually going to have these many people show up. And so it is always it's almost like, you're going on tour and you're like, you're doing a concert and you just hope people show up to listen to your music live, right? This is the same thing, except this is much more intimate in terms of being a community versus me singing, which you guys might not want to hear, even though I do have a very good falsetto, if I may say. But the fact that people took time out of their day, they showed up, they rearranged their schedules. Also, Game 4 for the Maple Leafs was on Saturday, so a lot of people, probably already had plans, and they carved out some time just to show up. It's just beyond humbling, dude. It is beyond humbling. And my parents don't know what to make of it, dude. Like my mom is seeing this picture and she's like, what's going on? I'm like, well, people are showing up. And she's just like, she doesn't understand it. She's just like, I don't know what you've built with this community, but it's one of those things that's very, very special. And I just want to keep it special for a long time. And part of the way we do that is we just keep doing what we're doing. We keep growing. Don't sell out. Listen, a lot of you guys told me that as well. I mean, a lot of you guys came up and said, one of the reasons we love watching you is because you're not selling us anything. And I take that very seriously because, again, I just think I've seen a lot of people get some level of fame and momentum, and then they immediately try to monetize it. And I'm not saying that's a bad thing. I'm just saying when you do that, you lose the authenticity that I experienced at the meetups. Like when someone's coming up to you damn near crying about how much they're happy to meet you and like the fact that you've been part of their life for so long, you don't get that when every 5 minutes you're trying to sell them a course, right? Like it's just like, and I don't care what anyone says. It's not the same. I'm not saying it's wrong to monetize your audience. And I'm sure in the future there will be some type of monetization. But when you go the route that we've seen YouTube financiers go down, which is this constantly join my private stupid group that I'm going to give you the best signal to trade, even though you can't predict when Trump's going to do this. Like all that stuff is bullshit. It's pointless. It's not real. It's a grift. And you got to really find the best traders in the world for it to not be a grift, which means they're probably not selling a freaking Discord because they're making their money trading. So it's just one of those things that I've never ideologically believed in. I've always thought it was full of shit. I love the game of performing and doing this every day. The adrenaline and dopamine I get from doing this every day is amazing. Now, is there a business associated with this? Yes. There are YouTube ads and like YouTube ads play before you watch the stream or whatever. So like, yes, that's how I make money off of this. There is a business to doing YouTube. But I think that's just, if you're making content, like at some point you have to be able to monetize it and you have to try to make some money off of spending your time doing this. But the reason we're doing it is not for the money. The reason we're doing this is for 170 people showing up in Toronto for the meetup. Because I was doing YouTube before when there were 40 people showing up instead of 4,000. And there was no money involved in that. And quite frankly, I'm making a lot more money in the markets than I'm making on YouTube. Like this year, I've already made way more money in the markets than I've made in 4 months of YouTube. And so the reason I do the YouTube is because it's freaking amazing to have these connections. And selfishly, I want to build my brand. And building my brand means that I need to have a bigger audience. I need to keep putting myself out there. I need to build my own community, because then you get opportunities to invest in a figure, because this random billionaire hits you up because he's been watching the live streams and says, hey, I really think you're authentic. I want to get you into a once in a lifetime opportunity to invest in a startup that might go to $1 trillion, which probably will pay a lot more than asking people $5 a month, right? Like, the reason I do this is to build the brand, not to make money. I'm not oblivious to the fact that this is a business and the brand eventually will make money. Obviously, selfishly, I want to pursue that. But the actual intent of the content, the value of these 4 to 5 hours every day that we're doing is for this community. And I know it's cliche, and I know the word community is used over and over, but that's the reason. The reason is because I just love the fact that people get to connect. People get to connect over something that we're all passionate about, which is the stock market. And that I get the ability to perform. Selfishly, I get the chance to perform every day. I get to do it every day, 2 times a day, sometimes 3 times a day, for multiple hours a day. I get to do it every single day. So that's the selfish reason I love doing it. I mean, to a degree, it is what every creative person goes through, which is that, in some respects, they're an attention whore, right? They want the attention. And then the question is, if you're an attention whore, are you going to whore out yourself to the point where you have no soul? Or are you going to be an attention whore that wants the attention, but you do something good with the attention? Because all of us are attention whores. If you're a comedian, musician, actor, you want you have to be kind of egotistical to want the attention, right? You have to have somewhat of an ego to want people to be listening to your opinion, and you care enough to broadcast your opinion to the world for hours every single day. But there is a fine line between egotistic and narcissistic. And narcissistic is, you get the attention, you think you're entitled to the attention, number one, which is why you have no humility or gratitude. B, you try to monetize the attention in every way you can, because you think of the attention as a transactional commodity that you can monetize versus a, spiritual act that people are giving up times of their life just to spend time with you. Like, to me, that's more spiritual than it is transactional. And then thirdly, you just want to see yourself get bigger and bigger at a full disregard for the way you get bigger, right? Meaning the ends justify the means versus the means justifying the ends, aka you do anything to get the end result, which is more attention, and you don't care about the process and the bridges you burn and the people you may hurt to get there. That is narcissism. And that is something that I've always tried to stay away from. Because when you get the attention, narcissism tends to be the inevitable byproduct for most people, because most people are not used to having massive amounts of attention. But when you get the attention and it's hundreds of people saying how much they can't live without your content and how much they appreciate you and what you've done for them, I want to go the route of, yes, does that fuel my ego? 100%. That makes me feel really good. But it makes me feel really good also knowing that I'm not trying to manipulate or get you to spend money to be able to have that impact. I'm doing this purely for the intrinsic value and the love of being able to perform, which inevitably will build my brand. And there's ways that will, increase my own personal success in life. But the transactional nature of it never really being there is something I want to keep consistent forever, because no one should have to pay to be part of these streams, especially if I just want more people to be part of the streams, because for me, it means the world that people are even taking time out of their lives to show up and experience the content. So there you go. That's it. Thank you, everybody, for being there. Appreciate it. Market's tanking a little bit. We'll see at 345 where this goes. Love you all being here in the chat. Again, we'll have a lot more meetups coming up soon. And bro just admitted he's a whore. Yes, I am an attention whore. I want the attention. I think you have to be, humble enough to admit, like, I like the attention. I like it. I enjoy it. I like people tuning in. I like people being part of this. I like people saying that they enjoy the content. I want that. But I think I want that for the right reasons. I don't just want that because I can do something with the attention. I can monetize it. I can put it, I want that because I've just always wanted to create. And somehow, some way, through all the ups and downs, I have the privilege to create every single day. Every single day. 2 times a day. And based on this week, it's going to be for probably 7-8 hours a day because we got so many earnings coming up. So that's another, I know I keep talking, dude. I was supposed to end like 40 minutes ago, but when the earnings come out, some of you guys were saying this at the meetup, and Google's going up 5 or 10%. Like, that to me is a show. That's an experience, right? That's like a football game. And it's like, we're trying to figure out what's happening, trying to get the numbers, the EPS, the earnings results, listen to what Sundar's saying. And we get to do that 15 times this week. for some of the biggest companies we've been following, like Hood and SoFi and Grab. And so to me, it's like, that's a show that I like putting on because I just like putting on the show. Like I will go back and listen. Like I listened to the Google earnings stream just to see what it was like. Like if I was a viewer and I was listening to this, would I be entertained? Would I be engaged? What did Amit switch to Sundar's quotes at the right moment, or did he spend too much time looking at the numbers? Like these are all the internal nuances as a creator. I try to figure out if it's going in the right direction because I just care about the show, that experience on a Thursday when Google earnings comes out. I want that experience to be a phenomenal experience for everyone watching. And as a result, you know, it leads to people being deeper ingrained in the community and potentially even showing up to see you in person. So there you go. That's it. Thank you everybody for being here. Word of the day. Here we got word of the day, and then we will end it out. Again, appreciate everyone showing up to the meetup, and we will do a lot more of these over the coming weeks. Word of the day is whore. No, I'm just kidding. Word of the day is gloaming. Gloaming.
Gloaming.
Twilight or dusk. The farmer tilled his fields until the gloaming settled over the land. The gloaming painted the sky in faint purples and deep blues. All right, so the stock market was definitely gloaming, or it had a gloam over it, however you want to use it, throughout the month of April. But over the past 2 weeks, or really past week, that gloam has turned into a bright light instead of a dark light, instead of a twilight. And by the way, Twilight was a phenomenal movie. Steve hasn't watched that either. You know, Steve hasn't watched Harry Potter. I didn't even get to bring that up last night. Steve hasn't watched Harry Potter. Dude, I should have grilled him on that. He has not watched Lion King or any Disney movies, not watched Harry Potter, and he hasn't watched Twilight. Twilight's a great movie. But yeah, stock market doesn't seem to be gloaming as much anymore, even though right now it's going red based on the updates on the trade deals we got last week. So yeah, he hasn't seen Harry Potter, bro. He hasn't seen Harry Potter. Dude, when I found out 2 weeks ago, I was like, you know, I'm going to have to say this live. You know, I'm going to finally have to get the chat on my side. And he was like, all right, I don't care. He was like, I'll defend myself. Last night, he took it like a man. He took it. Everyone in the chat was like, dude, you haven't watched The Lion King? He was like, nope. But then 2 minutes later, it turned on me. He was like, have you seen Steve Seagal or something? And I was like, no, what the fuck is and then the chat just turned on me. So it's of course, this is how it plays out. But anyway, there we go. Thank everybody. Appreciate you all. We'll be back at 3:45 for the market close. And we'll see how this market turns out throughout the rest of the day. And we'll get into a couple of earnings that we have after hours as well. All right. Bye, everyone. Appreciate you all. Meetup details for Houston coming soon. And I will see you guys later throughout the day. Bye, everybody. Have a good one.